the numbers fly. Checking the charts, midnight glory, heartbeat thumping, another story. Green and red, flashing voices loud, future kings standing on their throne. Checking the charts with her AI, up we go, reaching for the sky. Every train home never dies, on the edge as the numbers fly. Checking the charts, tracking the charts, midnight glory. Time to read all it's blending, mind on fire, never ending. Dreams of gold, relentless fight, push on through the endless night. Push on through the endless night. Push on through the endless night.
So odd. Now y'all can hear me. Whoa, weird. Yeah, my audio engine glitched out. Hello, friends. Hi, y'all miss me? I'm back. Okay. What's up? Okay, now we're back. Better, right? My little audio engine glitched out. No clue what happened there. All right, do me a favor, as always, smash the like button. First thing you ever do. Pay your tax to the YouTube tax man. Little thumbs up there goes a long way. How's it going? How's it going? Target yesterday's close? Probably target yesterday's close, but honestly, I'm thinking that today we just fall straight to DD band. I don't know. I don't really know. That's a thought. Or like today's gonna be one of two things. Today's the start of the big sell-off that's gonna open up and just sell and sell and sell and sell, and your market's toast. Or today is just another day that we revert to mean and chop all the way back up to the top and rally up to the catalyst line. I don't know. It's like you just never know with this market, right? The fact that it's kind of like inched its way down overnight, not the best sign for things. So, you know what I mean? It kind of feels like it's consolidating here and it's going to just open up and just blast straight down. VIX is going straight up, so it's kind of like one of those things. But we have expiration on Friday. So I'm a little concerned that today just kind of just dies. Feels like it. Maybe that's just you, maybe that's just me. Market kicked your ass for 2 days badly. I'm sorry to hear that, man. Hello, Jake from State Farm, Vanilla, Simon Dean, Ethan, Dion. Hold on. There we go. DNY, Rising Phoenix, what's up? Cool. TK. What's up, Pat Gandhi? Digital nukes, liquidity. How low are we going today? I know, right? I think bottom DD band is perfect for a long entry. One of those days like this, it just kind of shoots the lows and then turns around and retraces some of this. I don't know. I don't know, man. It's looking pretty bad. What's up, Patted Chan? Mac D. What's up, Texas Raj? Potential liquidation event. It's been overexposed in tech. I think it's in general, not just tech, but it's more likely the overexposure to a lot of things. We've been having liquidation sort of events since Bitcoin started crashing, and then gold started doing what gold was doing. And then like, all of that was liquidation event since October, right? Tech is just part of it, right? People are sort of, the economic data is coming out bad these days. It's not looking as good as it used to look. So with that being said, the entirety of Wall Street is sort of just backing away from stocks little by little by little because of their exposure to all the other stuff. What's up, Mike? What's up, Big Sky? David, good morning. My travel journal. What's up, NQ Dark Lord? Are we longing? He says in full capital letters. I might try to. You know, this market is not. This will be the first time, if it changes, that it sustains multi-day sell-off. Remember, we'd always been like 1 or 2 days down, 1 or 2 days up. It's just been weird. I am trying to take a long here, but I think I'm getting in a little early. Actually, let me drop that down to here. I was up about almost 50-60k, and then like in here I'm trying to build maybe a position, but I might be a little early because of that. I was thinking that at the open of the day, what is my average at 79? Yeah, like right here. U.S. rate cut in 2026 now no longer expected. If you read the dot plot, let's go over that really quick. On the dot plot, you'll see that from December, right, where the most people thought we were at 375 and 2025, and then we kind of average it out. The mean is sort of like right about here, give or take, like the middle. The middle is right about here. So that's one rate cut. This was the December projection that we would get one cut. When you go to now, March, in March, you can see that basically the middle is one cut as well. But the thing is, the difference is there are more people that are in the we need more cuts camp that have moved up here. So you can assume that it's less aggressive, even though the mean is exactly the same. There are more people down, so there's fewer people that believe we need a lot more cuts. They've sort of shifted their mindset. So what the consensus is, the majority of the FOMC is believing less rate cuts is appropriate. The overall belief is that less is better rather than more is better in general from the extremes, like the ranges of this. The mean is still right there at about 3.5, 3.2, 3.5. So that's like, at best, as long as things don't change, one rate cut. The thing is that Powell is very, he was very specific about his belief that the tariffs are a one-time thing. And that's why they, quote unquote, got it wrong. When I said Fed got it wrong, is that the tariffs, you know, they were believing that this economic data was very optimistic, right? That they had in December. And that data was there to suggest that once the tariffs pass through one time or do their thing one time, then it's over with. And I think that that is the, that's the reason why their data looks so great. And like, I don't even think this long's going to play out, to be honest. Like if you go back to the projections over, let's go to here. If you look at the December, right, when they thought that in 2026 we would have 2.4, now it's 2.3. It is coming down a little bit, but it's still very optimistic. According to them, at some point in 2026, it just spurs back up and keeps going. Unemployment rate still at the same pace. Inflation, now they've adjusted their inflation to represent how they basically underestimated the target. Let me make this bigger for y'all. In December, they thought 2.4, that would be the pace we'd be on. In 2028, long run, we'd be at 2%. It hasn't changed. They're just showing, okay, we'll have shorter term inflation. Their belief that everything revolving around the tariffs for the most part is a one-time pass through and then it's going to be done. And you can see that there's a sharp drop off between then and now. So that's kind of like what we're staring at. Anyways, coming through a little bit more. Yeah, I did want to get DD ban. I'm a little early on this. 1 of 10. Let me do like. This was like key level here. Hold on. Let me go to monthly map. Oh, that's what's missing. So they fixed the glitchy part of the watch list, and also historic liquidity maps are now available to you guys. Yeah. So that's why I was like, that's why I'm trying to long here, because this is where your hold on. This is where your cluster is right down here. I wish I had it on NASDAQ and everything, but this is where your liquidity pockets are. So that's why I was like, maybe I should just take a stab at it here. The thought is, okay, so Q closed at, so it's going to be at 595. Not 595. For here in this area here, so about 590, give or take, is where your kind of liquidity pockets are. So because of that, that's why I'm like, okay, let me take a stab at it at 590. Like, this is where your liquidity is on the longer monthly. That's why I was like, okay, let me maybe take a stab at it. Buy. That's what I'm saying. That's kind of like why I'm thinking like this is where your liquidity pockets are going to be. Either we open and we just fall straight down to here and then I just walk away from this one, or we open and then we hold liquid until expiration. Is it possible that today's sesh goes up to here? Yeah, I think that that's what I'm looking for. You know, that sort of like post-Fed rebound. Kind of hard to guess if that's going to happen or not. We'll see. But everything we predicted about the Fed was right. They would be grilled on their kind of what was perceived as oversight. Like, how could you project such good projections? Everybody was asking. And Jay Powell's comments were basically along the lines of, which was really funny. They were like, how come the projections are so different now than they were in December? They were so optimistic. And then he goes, well, the Fed is like 19 people all doing their own thing, and so everybody has their independent way of doing something. So, you know, I thought that was so funny when he said that. How could you all get it wrong? And he just kind of like diverted right to talking about everybody else. You know, of course, that's really the sentiment, is that everybody in the FOMC uses kind of like their own method, I guess, but I bet you they share the same software. You know what I'm saying? They have the Federal Reserve software that everybody inputs data into, creates the model, because the model seems to be the same for everybody. But yeah, when he was like, a bunch of people, it's just a bunch of people, you know, independently doing it, so that whatever it is whatever it is, right? So I thought that was a goofy answer. But why is it not saving my layout here? Let me redo this. Save layout, save layout. Okay, cool. Yes. According to why their estimates, and again, GDP estimates of theirs is just, I don't understand how their GDP estimate in 2026 is so good, like that we're just entering a slump for the first half of the year. We're going to pick it up at the tail end. I don't really understand, because our GDP numbers that are coming out don't show strong growth rate. They show growth rate decline. So I can't understand where the discrepancy is, but they grilled Powell over those numbers. You can hear it. And if you guys, as I prep you all to talk about like the things that are important to them, does it help you? Like usually when you listen to the press conference, right, when you're a new trader, it just sounds like gibberish to you, right? But then when I tell you guys, hopefully what was in that quarterly projection, then when you talk to him, it's just like you're so involved because you understand what he's saying. Everything he says and everything those people ask him is 100% information. You want to know 100% of what he's saying? Then just go through my lessons on how to read this thing right here. Does that make, did that help you guys? Like the last 3 or 4 days I've gone over this. When I talk about all this stuff, and then when he's talking about median projections, he's like, we have some outliers in the range. The central tendency seems to be this. You never knew that when he says central tendency, he's actually talking about this data. You just thought it meant, oh, we just kind of feel like this is what we want to do, the central opinion. But like everything he says verbatim, he's like up there and he's speaking directly from this document, right? So hopefully it helps y'all understand when he's like, there's a bunch of people voting a bunch of different ways and about policy. And he's talking about this. These are the people, these little dots. So, you know, he's like, it seems that the PCE for 2027 seems to be a little higher than the December projections, blah, blah, blah. Then he's like talking about the distribution of the previous read versus the current read. He's literally just verbatim spitting out information about this and people ask him questions. That's what he's talking about. Now, in other meetings, when you don't have this, he's still citing the same data, even though they don't have a published report to go over. But hopefully that was helpful to y'all. Yeah, he just sitting there talking about, they're basically saying, why's your data look so good? And that's not really what we're seeing out there. You know, can you explain, what's going on with the GDP? He's talking about, well, the temporarily, he words in a way where it's like, well, we just got it wrong for now. We'll be right later. He said like temporarily, the temporary increased effects of inflation due to tariffs, but tariffs are a one-time passer. He kept saying that over and over and over and over again. He's like, it's just a one-time effect and it takes some time for the one-time effect to come in. And he said sometimes between 6 to 9, maybe 12 or 13 months. He was literally throwing random numbers out there between 6 and 13. I remember hearing him say that. So, their estimates were like, tariffs can take anywhere between 0 years and 1 year. And so with that being said, the explanation of their model, we have the real answer in plain English. The reason why their model expects such amazing performance from this economic data is because the tariffs are supposed to come and go and be gone and never be in effect again. And therefore this effect that we're seeing is just temporary. And he may be right. I don't think that he's wrong. But I think that, they're optimistic about it's landing at such a hard time right now where people are already feeling the struggles of inflation. It's going to slow down the economy in general. And so you're going to see that GDP effect worse for longer, I feel, than, in 2026, we'll be back to like blazing fast growth rate. Yeah, maybe by the end of the year. Not like in March of the year, right? We're fourth of the way through the year and GDP is getting worse. The decline of the growth rate is getting worse. Where growth rate is 0.9%. It's barely, the GDP is flattening out. The growth rate is the slope of the GDP. So like the real GDP moving like this, once it starts flattening out, our growth rate is like that. I mean, we're just barely increasing. So when that growth rate is negative, your GDP is actually in decline. Down. I want to see that decline. Usually that's a lead off in a possible recessionary numbers, making me scared. Anywho, what about the gold drop? Do you see it as a big boy seeing liquidity for coming stock market drop? I think the gold drop has everything to do with somebody just people taking mass amounts of profit, just squeezing everybody out the top. I would say that gold in the frenzy that it's in, right? A couple of things, right? That has everything to do. Gold is a hedge against inflation all the time. And so, gold has just basically been tanking the last couple of days. And the reason gold has been tanking the last couple of days is exactly the reason that I'm talking right now. It's the opposite of what's going on with the rest of the world. It's how gold's just completely crashing. And why is it? Well, gold is a hedge against inflation, right? And the Fed is coming out saying that inflation's temporary. And that's exactly what you're seeing in gold. The thing is that we've been seeing that when gold has been squeezing so hard, it's been causing issues in the stock market because people are leveraged up in gold. And when gold is crashing, they've been trying to hold on to their gold position and liquidating some stocks. That's the effect that we saw first time gold started crashing out. So we're seeing that sort of same effect here. Remember back in beginning of January, back in the beginning of January, stock market did the same thing. Right? Gold started crashing out. It caused this like liquidity crisis. Like the market just started getting volatile again. And now the volatility's back up, which is kind of like scaring me. And again, I wanted to grab along this lower DD band, but it's looking like it's going to be a little volatile here. I might just want to cut and run, but I do want to have this trade at the open. Like I said, we're in a weird space. Let me double check Bitcoin really quick. And that's really why. I mean, the inflation targets we're back on course, right? And so ever since the Fed spoke yesterday, the gold 100% was certain to crash, because according to the Fed, inflation's not a problem. It's only temporary due to the one-time pass through the tariffs. So that's kind of what's going on with gold, right? They don't need the liquidity for the stock market drop, but that is a good thought. Some of them might need to just, free up some space to maybe buy some stock. But I think more along the lines is just people are abandoning that trade because oil is more popular. Oil's the hot thing. Gold was the hot thing when we thought inflation was going through the roof, and the Fed still comes through with these projections. Even with the worst economic data, the Fed is still like, nope, we're still on path. We're still on path for 2.0 by 2028. That's the same thing they thought in December. So the fact that inflation's not perceived as getting much worse, and that the one-time pass-through is barely going to take us to 3, that scared every gold trader in town. And then people that want to trade commodities are like, let's just jump in on the oil thing and remember today, Bitcoin and gold and the S&P are all selling off. So it could be one of those very nasty selling days. But you're right. Some of that could be people liquidating because they need the money. But right now, I think people are liquidating pretty much all the things. We're heading for full stock market meltdown here. But another thing is that these commodity traders jump in and they start trading other things that are hot. This is what happens with commodities. Gold's no longer the hot thing. Oil's the hot thing. And I bet you if the market continues to decline and gold continues to sell, it's going to continue to press oil higher because people are freeing up that cash to go long and whatever's hot for the month, which is oil. So I think that the gold trade dying out yesterday, I didn't say it on the stream. Well, because after I wasn't streaming at the time, Neon was streaming. I didn't say it in chat, but the Fed's commentary was an absolute doom for gold. And you can just see it like leading up into the FOMC. Ever since that report came out, gold has just been collapsing, which is understood. There's no reason for that fundamental gold play to even exist anymore. People are just taking their cash out. Yeah, they're just cashing out. I mean, they bought gold at the lows, thousands of points ago. And now they're sitting there at the highs and like, well, looks like inflation's done for. This trade's probably over. This trade's getting old. Let's get out of the way. So, but I mean, shit, people that got in 2025 have like doubled their money. So this is just a mechanic for that. Oh, yeah. So, I'll let you guys know I'm only going to answer it one time because a million people are going to ask. I put in a request to withdraw from the account. So sometime on the stream, yeah, I put in a couple, yeah, so I miscalculated, but I put in 2 withdrawal requests. 2. Number 1 was to lock in exactly what I locked in. Exactly what I put in. Number 2 is to withdraw a little bit more to make sure I basically take out what half was. The goal of this is because with the market being this way, I thought of this, and it's not like I needed to do it, but I'll give you guys a little sad story. According to Rad Doctor's appointment the other day, according to my doctor, I need to start taking it easy in life. I'm starting to I need to sort of like zen out a little bit. And while I am going to continue this challenge, it's not the money, it's the pressure of the challenge. It's anytime I take a big swing and take a big miss, it's like the social media goons out there. It's like such a spectacle that I'm not used to being famous and popular. And so that it weighs down on me less, I'm like, you know what? Let me just take it easy a little bit. So it's going to be a shitty 2 or 3 months. And I know I'm going to have other days of 100K drawdowns and 90K drawdowns or whatever. And so what I'm going to do is I'm going to take out half just to knock it in to half the balance. And then I've guaranteed profit for the whole endeavor. And then I just basically keep going with a smaller balance, smaller trades. So I put in 2 withdrawal requests. So at some point today, oh, I think one of them already hit, but at some point today, you're going to see another one hit. So I posted about it in the Discord. Yeah. Well, the other thing is that like I kind of just am like, it's because the market conditions most likely more than anything. The market conditions are as such that it's just not going to be a clean quarter, probably a clean half of a year. So because we're not getting a nice clean market, it's a condition of like, if this was a bull market, I would have made the $1 million in like 3 weeks. It would have been so easy to do it. But the fact that we're in this kind of market, the fact that you guys, like if it was just a market or a sell-off market, it would have been a little bit fine. But the fact that I did this million challenge and pretty much 5x my shit, almost 5x'd here in this environment is a testament to just being really good at trading. And it's going to be worse, I think, more volatile and crazier. It's very, 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 very hard to trade this. And like nobody else out there is trading a real account. Nobody else out there is making real money. Every single person on YouTube, every single person on socials, they're all prop salesmen and trading frauds. I mean, they're just, you know, they're not doing anything like this. And so I'm getting a lot of attention for it, right? And it's a whole different thing I like doing. I like doing these kind of challenges, but this is going to be a weird environment to do it in. So I said it's smart to just lock something. And ever since the flowers day, I'm so nervous about like this day. My biggest loss of the entire challenge was this right here. I stepped away for a minute. Trump said something and the market flew away and I came back and I'm like, whoa, what the hell? It wasn't bad trading. It was bad luck. And so there's going to be a lot more of this. So what I'm going to do is lock in profit along the way. Just be smart about it. So I've guaranteed that I've locked in, I think I locked in 100K or something worth of profit. It's not like the money matters. It's more like it's just kind of like the stress of it. Even iDoc told me, she's like, you care so much about this because you want to prove everybody wrong. I'm like, I know. And I'm like, but this is the wrong environment to be doing this in. If I would have started the challenge at any point, you know me, with 90% bull trades way back in here, I would have made it in 3 weeks. I would have made 100K back to back to back to back days, multiple days. This environment, the fact that I can make $500,000 in this environment, you guys are watching the best trader on YouTube. I'm not gonna lie. I pat myself on the back a lot for that. This environment, look at this bullshit environment. You see what I'm saying? It's impossible. This has been impossible to trade. I've just been doing super well. And I've been like making really good gains. And then the losses were like one-off flukes or something, you know? But that's the way that it goes. So not the environment to want to keep a big balance in and take big risk in. So it's going to force me to account partition like I always do. It forces me to step my risk down a little bit. So at some point today, you'll see the other withdrawal hit. So in the middle of the day, the balance will probably just turn. I did them at different times. That's outstanding when you think about it. Yes, sir. Why not show the other trades outside the challenge to shut people up? I understand what you're saying. Not shutting people up. Nobody's talking. The only people that are talking are people that wish they had 1 million people watch them a month on YouTube. People that may wish that their little Discord and software and trading income enterprise made $1 million a month like other people. They're just people that are just upset that we're big and they're not. I don't care what those people say. It's more along the lines of people that come and chat and like try to ruin the show and shit. They care about socials, you know, it's a legion of losers out there, loser traders. Trades outside the challenge, I don't know what you mean. Like you mean overnight trades and stuff? I don't know. I don't like give the Legion of Losers any extra work to try to prove something that you can't prove. Someone that just wants to hate just to hate. Is hate's breeding from jealousy because we're big and we make a shit ton of money from this space and the prop space and the YouTube space, and every kid out there is just hyper competitive. They want to be big because they want to make, you know, $10 million a year with their business or whatever. What about the other big account? You know, my other account, my actual trading account, I'm not trading it. That's the thing. I wind in this kind of environment when volatility picks up and I'm pretty certain the market's about to go full on bearish. I wind down. So I don't do much trading at all. Like, I'll sit out. I'm not doing any big swings anymore. Ever since this, like, last week, I haven't been making any trades anywhere. No hedges, no puts, no, I'm winding down. And so that's what I normally do whenever I'm determined that the market's just full on dog shit. If it doesn't repair itself today and get back up here, we're going in for a bear close. And that's the one reason why I'm trying to buy at this like lower pocket here, because I'm trying to bet that the market doesn't do that. And if it does, I fully wind down. So yeah, and I obviously, like, I don't also show everything I do. I have an options account that I'll trade, and I have a larger futures account that I will trade. Part of the reason I don't show that, because sometimes, let's just say that sometimes I'll make $1 million or lose $1 million in a day. Like, social media flips out when I lose 50K. Like, imagine what it would be. I mean, I'm probably of all the people that stream and all the people that are on Twitter and all the people that run Discord or whatever, I'm probably the biggest high roller when it comes to how big I'll bet on a single trade. I've made and lost millions of bucks in a single trade before. Trust me when I tell you, social media would flip the fuck out if I ever did that. So I don't really ever, and I like to take bigger, riskier bets. So it's not something that's teachable either. You guys don't need to know if I buy you know, 200,000 worth of 0-day Nvidia calls. I don't think that's useful to anything, but I have a right to gamble with my own money if I want to. And then you got somebody in chat like an idiot. Like, here I am, like, look at this guy. I love you, bro, but wow, what a back out. I was talking junk on your behalf. Now you're going belly up. It's like people like this, dude. Like, look, the person who said that, you're broke as fuck. That's why you're watching me. You wouldn't be watching me if you're a rich trader. So shut the fuck up and watch and learn. The fact that I'm taking money out is your education, kiddo. I don't sit here and watch other streamers. I'm a fucking multimillionaire, kid. You're here because you're broke. All right, so learn. Don't teach. Don't teach me anything. You're here to learn. See, that's what I'm saying. I'm doing the smart thing with managing money. You got somebody here saying, well, I think I know better. Like, no, the mods remove that, kid. Look. This is the smart thing. Normally, I'll double the account and take out half. I 5x the account, I'm going to take out half now instead of going 10x. Don't worry about your own stuff, brother. I can't even make $1 million the right way. I got every broke person in town telling me how to do it. That's what my life is like, right? My doctor's like, you need to kind of chill out. I told him, I'm like, you know, I'm trying to feel like overwhelmed in life. He's like, you're doing too much. I was like, yeah, but I don't want to stop. I love it. He was like, so how, because they know that I did the whole YouTube thing. And my doc was like, yeah, this challenge thing, it's just getting so unlucky. There's just like crazy people. You like arrogant Matt? Oh yeah. Arrogant Matt's the best Matt, yeah. Why not teach people how to trade smart and not take huge losses? Somebody said. That doesn't make any sense. I don't take huge I do trade smart on the stream. You can't control what the market does. And it's not huge losses, dude. If you like, one of the things that if I'm trading and I'm up to 500,000, I'm doing something right, dude. I'm doing something right that nobody you've ever watched trade does right. So if you tell me I'm doing something wrong, then this world is cooked because nobody's doing anything right. You know what I'm saying? Like, that's as right as it gets. And the environment that we're in is part of the reason it makes it hard and unpredictable. I mean, this market has been flat Since I started the challenge back in November, the stock market has gone nowhere. Imagine me outperforming every fucking S&P fund manager on planet Earth, getting 500, almost 500%. They've made like 2%. You know what I'm saying? Like, I'm doing something right. So let's just start there. All your 401k has grown 0. Every ETF or mutual fund has grown like 0 to 2%. I mean, it's literally, it's grown nowhere. And so in the trading sense, in this environment is the reason that big losses are possible, because there's just random volatility, right? Huge loss is relative too. For this environment, it's not going to be easy just to make a bunch of money. So yeah, I'm just deciding to take out half the account because I had a huge win at the end of the day after I took the deposit, but the withdrawal. It was yesterday, and then I requested another one overnight. So it was part of it. Yeah, I did the random challenge. Nobody appreciated that either. That's just how it is, man. Oh, finally we're getting some movement here. Let's go. All right, do you have a little wee woo here? That's what I'm saying. Everybody always has something to say, but like, the fact is, people are here to watch, to learn, and apparently there's too many people that think they know something I don't, which I never fully understood, because, you know, for the other way around, I'd be watching you on YouTube, kid. You know what I'm saying? You be the one with the life lessons for me. But everyone got something to say. Yes, I withdrew half the. I put in withdrawal request to take half the balance. Sometime on the stream, you will see another withdrawal hit, and it'll probably cut it down another, maybe 250,000, 300,000 or something. Yeah, I'm gonna trade 10 long. Yeah, betting bigger because the account is bigger. The goal of this is to get to $1 million really quick. If this was a clean market that wasn't a choppy, flat, transitional market, my actual trading style, I could have got there in about 3 weeks, 2-3 weeks. It wouldn't have been hard. But imagine this market, right? Imagine getting faked out 1 out of 3 days. There's nothing you can really do about this. I mean, imagine this, right? Like, anytime you want to try to chase long, it zaps you down. Chase the short, it zaps you down. I mean, it's just been scalp central for the last couple of months. So I basically scalped my way into this prop. It wasn't like, there hasn't been a lot of great trading days. There's a couple 100K days, couple 100K losses. In a nice bull market, if we would have had like 1, 2, 3, 4, 5, or 6 days up, I would have gotten a lucky stride and back-to-back 100K days. I would have finished the challenge maybe in a lucky week or 2. So the nature of the environment is making it really hard to do the challenge. But I mean, yeah, I mean, yesterday at the end of the day, I was almost at all-time highs in the account. It's just smart to take some out, like to force me to trade smaller and to force me to keep my risk low. It's called account partitioning. It's part of my bootcamp. I teach the same philosophy. Account partitioning is a way to put the bulk of your change on the side. So essentially everything I put in the account, I've already withdrawn. So I've already withdrawn enough to guarantee that I have some kind of profit. I've already guaranteed that I've made, I think, 100,000 and something in profit, the whole endeavor. So if I blow the whole thing up, I still made money. So yeah, it's 100% success. I've made money. Oh, well, hell yeah. Well, I'm making some money right now. Let's go. I've also decided to stop trading props. This is another announcement. As of yesterday, like I said, I'm trying to de-stress my life. I'm going through this kick right now, trying to de-stress my life, because I've added a lot more to my plate. And so I have, like, you know, because I'm opening the tea shop and I'm opening the fitness studio and I'm about to open the escape room. I'm about to open the prop scoring website. I'm creating 4 new businesses this year. And my old little heart can't hold it anymore. I'm starting to get like overwhelmed and like, you know, anxiety and stuff in life, because it's just, you get old, your body starts fucking falling apart. That's all it is. I'm not a pussy, trust me. You folks that are old like me, you know it. Once you get old, you just got to start making health changes. So I'm doing health changes, whatever. Doctor's like, you got to cut something out. So I've fully decided, guys, 100%. I am no longer trading props, period. I'm done. I just abandoned it. Took out all my payouts. flushed it out, I'm done. So I was trading props to build some information and knowledge about the prop space, to learn about props, to understand how the space works. Let me just kind of trim out a little bit of this. I'm not certain that we do rally from here. Hold 6. I traded props to build the stream, to get us big, to get us to be one of the biggest streams out there. And as of today, March the 19th, I 100% am no longer trading props. I don't need it. I did it for clout. I did it for growth. I did it to be connected to the community. I did it to make a network of myself in the prop space. Trading props, I had to understand all the props, how they work, go live in a bunch of them, but I'm no longer trading props. I'm cutting that out as well. 100%, I'm done. So yesterday, I didn't, somebody's like, did you post your prop gains? I was like, oh yeah. I didn't even open my Funded Next yesterday. So my changes are, I'm cutting my stress down a little bit because I am just completely running like all 4 wheels, baby. Full gas, full pedal down. I don't need to trade props. I only did it to grow the stream, and it worked successfully. We're now the 2nd most watched futures trading YouTube channel of the non-prop firms. So you asked in Martin a couple weeks, yeah. So yeah, so like a lot of people, my brand is completely going to focus on live trading now, but we're still going to be very like ingrained into the prop space. You know, like we're going to know everything about it. You know, the goal was to know everything about props so I can release this big prop scoring website. It's all part of it. And now that it's coming out, I know everything I need to know, and I can teach you guys how to beat the props because I beat the props. I went live in 3 of them. But it's just, I'm going to be the first to tell you, it's not the best money. Real trading is, and so I don't need it. And I think a lot of the YouTube space is people that don't have real money to trade, so props is the best they can do. And so there's a lot of people building their name in the prop space as prop traders. But like for you guys, you need to learn from a real trader. You're gonna get some good skills from that. Prop is all a gimmick on how to beat it. So as fun as it was trying to build the gimmick and make the gimmick and make, you know, some decent money, it's definitely not worth my time anymore. So I fully am abandoning trading props personally. Doesn't mean I don't support the prop space. It just means I don't have any room on my plate to do it. I'm opening 4 businesses this year, juggling the $1 million challenge account, and then what I'm going to do, juggle trying to go live in 2 props at the same time. Doctor's like, you need to cut some stuff out, man. What don't you need? What of all you're doing makes the least amount of money? And I was like, prop trading? Why do you do it? Oh, well, it's because, you know, it's some money, but it's like, you know, it's just like part of the business. You got to get to know it. And he's like, yeah, you don't really need to do it though. No, okay. Don't make a lot of, you know, I say some money, you know, I think I've pulled out close to $1 million from prop firms in the last year. So, after taxes and after fees and all that, that's not net, and net's probably close to half of that maybe, or a little higher. But yeah, I'm no longer gonna trade props on the stream. Yeah, still in the prop industry. I'm just personally not trading props. I've never needed to. There's no reason, if you're a successful trader with money to your name, would you ever want to touch a prop. Don't believe anybody out there that says, oh, I just do it for side cash. They're fucking lying. They're just saying that because they don't got money to trade with. Well, I just try to make a little bit of side cash. Look, I'm the person that's going to tell you, nobody would elect to trade multiple accounts to make less money. It doesn't make any sense at all. Put that all in a real account and trade it. So there's no, oh, I just do props on the side because it's fun. I want to make a little extra money. Can't see my real account, it's hidden, but I trade props and that's all I want you. And that, dude, everybody's telling a story. It's just kids that don't got money to trade, and all they do is trade props. Get $10,000 to their name. Yeah, you always thought it was cheesy watching people trade. Yeah, so we're going back to our roots, man. Full real money trading. That's it. Yep. Anyways, that's the announcements today. Oh, by the way, monthly maps, historical monthly maps are out. Sorry, historical liquidity maps are out. 4 minutes to market opens. Just showing you guys really quick. If you want to see the historical liquidity maps, you go to a 15-minute chart. It should load them up. Takes a little bit. But look at this. This is now live. This is now there. And the issues that we had with the glitchy watch list, that has also been fixed. So now you guys will have historic liquidity maps that you can rip data from and do some back tests with before we build our backtest module, or wait for the backtest module, because it will now go through and it will now go through and grab that, and we'll have the very next step is real-time probabilities on the chart, baby. We are so close to that. Like I said, you know, that's why I'm telling you guys, I got to veg out a little bit. I forgot to mention the other things we're doing. So back to Smodule coming out in Rocket Scooter. As of tomorrow, I just got the announcement today, we will be live in, the final deployment is going live tomorrow in Go Charting. So as of tomorrow, Rocket Scooter will be live in Go Charting. It'll take us about a week to get the business side set up, so you guys will be able to use our tool, connect through our authentication and load up our stuff on Go Charting. And another announcement is that Oleg Mukhanov, you know who that is? I'm spelling his name right. You know who that guy is? He used to be the CEO of TradingView. He was the CEO and CFO of TradingView. Now works at Go Charting. So, so the old CEO of TradingView is now the COO of Go Charting, who we're partnered with. Yeah, so that's a huge change. Anyways, we'll be live on Go Charting. As soon as we're done with Go Charting, Rock Scooter Tools will be live in NinjaTrader as the next step we're going. So like I said, I got a busy plate this year, and that's why I'm telling you guys, I gotta cut some things out. I'm not gonna lie, dude. I can't handle all of it anymore. Building four businesses, a custom Vietnamese drip coffee matcha shop, building a fitness studio, building a escape room later this year, launching the prop website, putting Rocket Scooter in Go Charting, putting Rocket Scooter into Ninja, being on my funded TV show, streaming all day for you fine folks, and running Rocket Scooter. I'm a busy boy. So yeah, I gotta start taking it easy from here. Oh, I love it though. Love it. Oh, I'm still doing my funded TV, yeah. So announcement, guys, I've withdrawn half of the balance. You should see it. I made 2 requests. It's coming out in chunks. Some point today, you're gonna see about half of the balance disappear. So I just basically withdrew half because this market is toast. And it's gonna be more chop fest. I'm just reducing risk as and when should do. In my real trading account outside of the challenge account, I'm not doing any trades at all. I'm completely abandoning the market. I usually wind down when volatility goes high and it's proof the market might crash. I usually wind down and let it happen. Until VIX comes down, I'm not making any big trades. I'm not making big options trades, nothing. Last announcement, I'm no longer prop trading. I think prop trading doesn't make any sense for somebody of my caliber. I did it just to get big on YouTube, and now that we're big, I don't need it anymore. Cutting it from my diet. I got room to balance funded next accounts and TVT accounts. I make more money in a single trade than I would in 2 weeks trading TVT. So, gotta clear the plate a little bit. All right, guys, 10 seconds, and we go. My bet is that DD Band is probably going to open and dump. I got 6 contracts, and I'm not really super married to this. I had a little bit of gain overnight, but I do want to be long at lower DD Band. It's my goal, which is what I want to do. Let's see what happens. Boy, this could be the worst decision I make today. We'll see. Hold on. Oh, that resilience is negative. Yep. That's actually NASDAQ DD Band, though. It's one shot at this. And if I do take a loss today, it's absolutely fine. Then I know that the market's dying. And if it holds here, then we're good. That's what I wanted to do. Come on, no die today. Don't die today. That's it. That's all I wanted to do. I wanted to test that out and leave it at that. If I get it right, then this market saves itself, then we're good. If I'm wrong, then we're dead. We are dead. This market will be dead tomorrow. I'm hoping that the DD ratio turns out fine. Oh, shit. No. Below MH reopen. Okay, let's see if resilience turns around. If not, I'm just going to abandon this, get out of the way. Oh, not good, folks. Not good. Below MHP leading up into monthly expiration. We got 5 minutes to get up here, or I'm just going to close out and walk away. No good, no good, no good. No good, no good. Resilience just went positive on S&P for a hot minute. That sounds good. Let's double check where the stocks are. Can we get the post-Fed response rally? That's what I'm trying to maybe swing for. All right, Apple below MHP, not good. Nvidia, let's double check this. This is Nvidia liquidity map. Okay, skip it for now. ABGO at support. Okay, that's good. Meta. Where's all of our maps aren't coming through yet. There seems to be an issue here. No way that's 0.08. That's got to be a fluke. It seems to be we're missing some data. That's very weird. We're not getting any. Let me instruct my team. There seems to be an issue with the data. Hold on. Oh, wait. Finally, it's here. Okay, okay, okay. Oh, not good, Nvidia. So we just had a little delay on the calculations. This is crazy. Here, yeah, I should probably just count my blessings. Boy, that is extremely bad. So it's not good here. S&P resilience is positive, which is like the one maybe saving grace. But other than that, I'd probably make the right decision yesterday of saying this market's doomed. Let's just take some balance out. The positive resilience is enough to create a hedge pressure break. That's the one thing I'm looking for. This could be enough to take us to there. But we'll see. I'm willing to risk everything I've made last night to take a bet that we do get that kind of turnaround, but it's very, very, very on the edge here of crashing. DD ratio is 10, dude. 12. Yeah, almost every stock opened in a bear zone today. That's nuts. This market has accepted its fate. Normally you want to see a sharper response off of this, so... Oh boy. I'm like... If I walk away green today, then I'm lucky. Risk it for the biscuit. Needs to crash. We need to crash. Is that today though? That's what we'll see. Boy, this doesn't look good. Oh man. Normally you get some kind of play off a lower DD band, but we'll see. Y'all have never seen it at 0.8, you know what I'm saying? Oh yeah, we're toast. All right. Oh boy. I'm just thinking like after the initial squeeze that we maybe get that post-Fed sort of move. I'll be willing. I'll take the risk on it. If I'm right really big though. I don't think it's good play though anymore. But lower DD band is the one attempt I can take. Problem is it could overshoot and then come back in. Is always part of it. That's why I don't like these volatile moments. So we have basically BRSD, which is just bearish from monthly hedge pressure. So this whole thing is just resistance across the board. The one thing is that the resilience is somewhat positive. So there is a little bit of, you know, some of the stocks that open flat are still chilling, not selling off yet. But hopefully, like I said, this is not as bad as you would think that it is. So this could be a span through the gap. So that's kind of what the whole bet is that if resilience is positive or positive enough, this play is there, which when you do bust through hedge pressure, it can create a squeeze. So these kind of plays are like, you know, it's kind of 50-50 on this one because the data is also bad. But if it does create a move, the move is big because to fill the gap, you're going to have to bust through 2 strong resistances. And it is strong enough to do that, that it can cause just a massive squeeze. So the opportunity is there. It's worth it to risk whatever I've made to try to take it. But lower DD band, even though I don't have the full confluence, I'm not hitting it with 50 contracts. I'm hitting it with a medium 20. When somebody said bad, no, the mark. When I say the market's bad, I mean the market's going down. The economy's bad. Oh, trading's good, man. I'm way up today. Nothing bad about that. The problem is S&P is where that limit is. I might be in early. Dude, this is just gnarly today. I don't know. That immediate open reset. Chop and learn. As much as I feel like I'd like to be long, I'm not actually feeling this trade as much as I want to be. Middle check NVIDIA. See, NVIDIA is below MHP as well, so that's one of the limiting factors there. Meta's at MHP, so Meta's kind of okay. Microsoft, not that good. Google's okay, so Google's good. Above MHP, Google is good. Goog and Google are both okay. They'll probably be similar to each other. Amazon, not so great. Oh, that's VIX. Hold on. Believe it or not, the stocks do have MHP support, which is pretty decent. Resilience pulling back a little bit, so we are losing some of that potential on the S&P. Oh, look, I wasn't even paying attention. Looks like trades moving a little bit. Yeah. So right now, the problem that I foresee is that the resistances here are just too strong. We don't have enough power to push through it. I probably should just take the profit. But let's just take the risk anyways. It's a medium position. This is the resistance here are way too strong. We've got hedge pressure, monthly hedge pressure, and open price. They're both gonna be really strong resistance. As a matter of fact, this can hit this and then just do that. Trust me when I say, with negative resilience and negative all resiliences and a cluster of all negative pivots here, it's a moment away from just hitting that resistance and dying. It is actually the smart thing to lock that in. Let me wait. Let me wait. If we reclaim 449, I'll jump in on the long, possibly. Yeah, so watch. It could just do this. Just watch. Nah, I don't want to. I'm going to wait for the second bounce. I'll give you one more shot here. Let me just wait and see. Hold on. If we reclaim here, I'll jump in on a mild, small position. Let me let it tap it one more time, and I'll slowly build into another position. Yeah, I don't have the evidence. Although while the monthly hedge pressures all look pretty decent, there's some volume flow that's picking up right now. As a matter of fact, I want to put on some jams. Y'all want to hear some jams? I want to hear some jams. Let's play it cool today. Oh yeah, this song was pretty cool. This is one of my new favorite songs, the Trending Bull Market song. Guys, do me a favor, hit that like button. A few announcements if you weren't here for them. Number one, Rocket Scooter will be live in Go Charting tomorrow. Go Charting's new COO is the old CEO of TradingView, so they're really pushing to grow their brand in space. TradingView now has a very viable competitor. Another announcement, I'm going to be on the Go Charting TV show Friday afternoons, probably once a week or once every 2 weeks. It's like TradingView. It's very similar to it. There's a lot more features though. If you want like in a nutshell pitch It's TradingView that also allows you to connect the Rhythmic. But you know, TradingView, you can't trade half your prop firms in if they're on Rhythmic. So they do Rhythmic, CQG, and NinjaTrader. And it's pretty flawless. I've used it. I love it. So it's almost similar pricing model, everything. And it's the same kind of look, same kind of feel. They have an app. You can trade your live brokerage account. All right. So now, wow. So now data's getting better. Holy shit. Okay. For resilience being greater than 0. So I just put a 2 spot. Let me build into it. As long as data looks good, it's not that bad. All right, let me build into it. I just grabbed 2. Resilience is positive. MHP resilience is positive. So with Go Charting, I'll make the announcement and tell you guys the instructions. It's going to be that if you've bought it from us, then when you go to Go Charting and you log in there, then you log in like with our authentication, then it should turn it on there. Well, don't worry about it now. We'll tell you how to get into it. Let me just jump in with 4. Resiliences have just turned positive. Maybe not. Maybe it is better. Some stocks are starting to move here. Nothing big. I'd rather just ride with what I've got. If we break through hedge pressure with positive res, I will absolutely jump in for the pocket. Oh, that'd be fantastic. I'm not too convinced that this is a big bull play, though, but things have turned a little bit better. 0.15 DD ratio, that's not that good. But this is where I say all those cluster resistances are here. 2 of them have flipped to support. That's kind of why I'm like, let me take a stab at it. I'm still not super convinced. That's why I've just before on it. So the announcements are, we're going to be live on Go Charting. As soon as we're done with that, we're opening another project to go live on NinjaTrader. So our stuff will be available there. After that, we're going to do wealth charts. We're going to go 3 different places. Oh, whoa. Who has the MHP break right now? Apple MHP break. Is this the start of the bull market? All right, let's check it. Fuck it. All right, let's go for it. Why not? Apple MHP break to the upside. Huge jump in MHP res. The AI Counting Crows song. Yeah, so like the difference is you can either A, have our platform where we give you the data and we give you the stuff, or B, you can have their platform where we just give you the indicators and you buy your data from them. I would say that like a sister platform like that is a more, once everything's said and done, is probably a better experience if you want to live trade in the same platform or trade on an app with your raw executor tools in the app. We're kind of like moving our business focus from being in the platform business to being in the tools business. So in an ideal world, in the next 2 or 3 years, we're going to decommission our platform and we're just going to be in everyone else's platform. And it's much easier for you guys. Like you don't have to go out and get a brokerage account to get your futures data and stuff like that. It'll just be you sign up for TradingView, sign up for Rocket Scooter. Oh, we're also going to be in TradingView after. I forgot to say that before wealth charts. We're going to try to get in TradingView as well. So the goal would be that wherever you go, you can just buy our tools and they'll be there. And NinjaTrader is the next, Ryan, right after we do Go Charting, we're doing NinjaTrader immediately next. DD ratio is a % of stock market cap that is in a bull zone. Yeah. Right now, the majority of stock market cap is not in a bull zone. 50 is the break point, so it's 15 right now. So first announcement is Go Charting. Second announcement after that, NinjaTrader. Third announcement is historic monthly maps are now live and fully, like they were live a couple days ago, but now they're fully like bug free. We got all the bugs out of it. We found a few bugs after we released it. They're not available for futures yet, but for equities, put in SPY. You'll see that your historic maps will now populate. Look at this. So that's done. Very next step, we're doing our back test. That's to kind of like The backtest module is the next thing we're building here. So that's really neat to have that. You guys can, you know, do your own backtesting if you know how to rip the data from this. And futures is the next step here. We haven't done the conversion for futures just yet. My data stays good there. My initial suspicion of closing when I did was good. Just imagine I just closed 14 because I'm backing on 6 on the 20. After this, other announcement is I put in requests to withdraw what I estimated to be about half the balance of the account. Number one is this market is volatile. This market is crazy. It's always smart to just lock something in to cut your risk, called account partitioning. I'm moving the money to a safe place. That way I can put it back in case I need it. So I've guaranteed I've made profit on this whole endeavor. But at some point today, you're going to see another drop in balance just because the withdrawal request will probably hit sometime today midstream. So you're going to see that drop. I left myself about 300,000, 250, 300,000, give or take. To keep going towards the million. Last announcement, I'm no longer trading props. 100% done with props. Just no reason to do it. It served its purpose. I'm still a big part of the prop industry. I'm still going to be a big part of you guys' journey in the prop industry. But personally, me trading this and then trading props on another screen, I have to reduce my workload and doing something less. And to be honest with you guys, I make so much money trading. I don't need to be trading props. I just did it to grow in the space because everyone wants to watch prop traders. But personally, don't need to do it. So it's one less thing on my plate. I love this song, Farina. No. Okay, let me start over. No. I'm not done with the prop industry. I've moved my focus to building the world's greatest prop. Oh yeah, by the way, this Monday, beta testing is launching for the prop scoring website. You guys in Rock Zero have accessibility to it. In the prop scoring website, we built this kind of credit bureau, an auditing firm that audits every prop firm and ranks them based on their integrity, their offerings, all the plans they have, and it gives a scoring system that literally ranks the firms as to which one's actually better value. That is coming out next. I'm on My Funded TV. We're still doing prop giveaways every single day. The only difference is I'm not trading prop accounts anymore on the side. Like, that's just an extra thing I was juggling. I was trying to go live in every major prop. I went live in ETF. I went live in My Funded Futures. I went live with Tradeify. On top of everything I'm juggling, I just don't have enough capacity mentally to do so much anymore. I'm also opening 4 businesses this year. Matcha tea shop, and Vietnamese drip coffee, a fitness studio, which we're building right now. We're getting ready to build right now. I'm opening an escape room later in the year. So that's those 3 businesses plus the new prop site is 4. So I'm a busy person. One less thing on my plate. I went to my doctor and I was like, man, I'm starting to just feel overwhelmed and stressed and fatigued and I don't have energy. And he's like, you're just overworked, man. You need to take a break, knock something off your plate. And we basically sat there and it was like, everything that you do, what's motivating you? I was like, I just love building. I love creating. I love doing this stuff. I'm doing so many things. He's like, well, you got to cut something out. What on your plate takes the most time with the least return? I was like, prop trading. All your streams of income. That. It's unnecessary. So that's 2 less things I got to worry about. So you're not going to see me post screenshots anymore of like my prop accounts. I'm just kind of done prop trading, but I'm still going to be there for you guys' prop journey. I just never needed it, you know, like it's just something I did because your YouTube channel won't grow unless you do it. So hell yeah, come on. Oh, there we go. Well, I'm glad I got back in with 6. Could have been the 20 I had, but that's a smart play. I have pretty good evidence now that we push through at least a half gap. Maybe to the pocket. Can I get my funded next accounts? I'm going to, yeah. So basically I've been sort of taking out as much as I could. I've almost taken most of it out. So I'm sorry, I've almost taken all of it out. So there's really, once I wound that down, I took my last TPT payout on Tuesday. And I'm just kind of like, pretty much done. The reason for that is I can't juggle so much anymore. It's too much. It's a mental health. I gotta protect my mental health. I'm doing way too much. I'm overworked. Did I get kicked from a firm? I didn't get kicked from a firm. What are you talking about? I've never been kicked. I've never been kicked from a prop firm. Never once. What makes you say that? Zero firms have ever kicked me out. Apex didn't even kick me out. I could trade Apex still if I wanted to. Let me take the profit on that too. Apex and I just don't have an affiliate partnership anymore. Apex never kicked me out. I can go open an Apex account if I wanted to. They kicked other people out for cheating the system. I don't trade with Apex. No. Yeah. The long story short with Apex is that we had a code with them. We never used it. It was 3% of our sales. Everyone here collectively thinks Apex is a scam, so nobody uses them. They hired some people to start working PR. They started flying out, taking me to dinner and trying to sell me on all this stuff. I was skeptical the entire time, and they were trying to tell me what to say and what to do and to delete this post and delete this message and delete this comment in your stream and delete this comment in your Discord. This is what they were telling me to do. And I just didn't do enough ass kissing. They wanted to censor what this community said and what the public said. The final straw was I put a tweet on Twitter, and they spent days trying to convince me to take it down or else, and then I regret taking it down. But I put a thing on Twitter that just was a poll, and this was on February the 2nd, but I put out a poll that said this. And they all went a fucking frenzy over it. I got text out the door from everybody. Hey, this is causing sensitivity in the upper ranks. You know, we need you to take that down immediately at once. Yeah, this is not cool. That's not cool that you said that, blah, blah, blah. Read it again. Like I said, I don't care if you're giving me a check, give me free accounts. I'm not gonna go kiss your ass and censor my community. They wanted to buy censorship from me, and I'm not gonna do it. And so that was their response to that. But that's the only thing I gotta say about it. Good luck to them. We didn't need them. Nobody here uses them. Like I said, they're 3% of our affiliate sales. They just canceled our affiliate relationship. So like other people that got like blasted out or whatever, got blasted out for cheating the system or posting payouts or whatever. I don't even trade with them. I don't own a single Apex account. Let me trade with that garbage. Kidding me? Why on earth would a guy like me ever touch anything like that? But that's what happened. I don't care if you're cutting me an affiliate check. I don't care if you're flying me out to... They flew out and took me to dinner twice. They offered me 2 free trips, by the way. They offered me a trip to New York Stock Exchange to go with them to ring the bell and be on TV. They offered me another trip to go to Max's event and sit at their booth and speak on their behalf as a representative. And I ghosted them on both of those events. I literally came up with a bullshit excuse not to go. I was like, oh, I'm launching my prop website. I'm gonna be busy that weekend. I fucking ghosted them straight up. I wasn't gonna go and sit there with an Apex booth. You kidding me? They were offering me free trips. All they're trying to do was lobby to sway everybody to get on their side for this big launch. Nothing personal. It's a good business move. I don't fault them for doing it. I do the same thing if I had a business that I was trying to get public opinion on. They wanted to get people on their side. They did this big launch and all the affiliates were like, it's the best thing ever. I didn't do it. You're not gonna buy my opinion. No, I'm me. You guys know me. I speak my mind wherever I feel. I'm washing my hair. That's what I said. Okay, it's looking good for an MHP support trade. God, I just want to like jump in so heavy, don't I? But no, good luck to them. Like nothing, no bad blood. And that's the thing that people are like running away with. There's no bad blood. There's just not a They're just not an affiliate code anymore, but they didn't ban me from using their products. Oh, I'm not a person that went in and cheated the system to make money. No, I never do that. So I can go buy an Apex account right now if I wanted to. Why would I ever do that? They're the worst ranked prop firm in their category on our prop scoring website. Literally the worst ranked one of the Big Ten. The value is not there. But good luck to them though. Like I think they're, you know, the people I met that took me to dinner and the people offering me trips, they were all nice. They were just regular folks like you and me. No bad blood. But clearly I don't think they want to support somebody whose community is so derisive towards them. I mean, that poll caused a frenzy, and literally that's exactly what was in the tweet. You know, this thing that you posted, you got to take it down. I mean, I got a phone call immediately like, hey man, you got to take this down. This caused a frenzy. You know, like, I'm batting for you. The guy's like, I'm batting for you, man. We really like you, but you can't be saying stuff like that. And I'm like, I didn't say anything. I just polled the community. You want, and I was like on the phone, I said, you want me to censor the trading community? No, I'm not asking you to do that. I'm just saying it's caused sensitivity in the upper ranks, you know, and like, you know, we're trying to work with you and we're trying to work. It's literally like subtle, take it down and we're going to can your ass. And I'm like, all right. I'm like, maybe, and the only reason I took it down because I thought I worded it unfairly. And now I think I worded it the right way. Because I said the word fraudulent, I feel like I was allowing people to choose that. And I was like, maybe I worded it poorly. So yeah, let me give them a break. I'll remake the poll. But I just never remade the poll. Because IDOC and I were busy that day. It's like, maybe I shouldn't have said fraudulent, but I should have said questionable. You know, because like I was believing like, well, because I put those words there, maybe I'm inducing people to say that. So I actually had this sort of like, maybe grammatically I could have said something different. It's the only reason I took it down. February 2nd. Anyways, enough about that. Y'all want a real experience in the prop space? That's why y'all are here. I'll be the real guy with you. I won't kiss somebody's ass and tell you something's good because they're giving me a check. I just wanted to see, because like the reason I put that poll out there is because they were pushing so hard for like, we're changing our mind, we love to work with you guys, we're gonna make everything good, I promise. And I'm like, I want to see if my community actually likes them. I'm not going to side with something that the majority of my community hates them. There's no way I'm going to put myself in front of the majority and say, no guys, this is great, because they're telling me to say it's great. I polled you guys. 67% of you said, fuck no. 40% of you said they're an outright scam. There's no way I was gonna like, yeah. And then when I put that poll out, ain't no fucking way I'm gonna fly to New York with these guys and be on TV with them. I'm not gonna be seen with them. I started ghosting them once of that poll. That poll saved my ass from what's ultimately gonna be, you know, bad PR for me being in a position of, oh yeah, well when they went under, remember you went to New York with them, and I'm like, yeah. So I have a right to research the integrity of people I'm working with. It's a two-way street there. I do my homework, and you guys were like, fuck no, stay away. I'm the magician that shows how I pulled it off. I like the masked magician. You remember that guy from the 90s? I mean, like I said, I have got nothing to hide. There's no downside for me. Every prop firm in town that I work with is good. And for the longest time on the stream, it was like, you have their name on your stream, but I was like, yeah, but I don't really know anything about them. I don't really use them. Everybody here was like, they're just not that good, Matt. You gotta like... So I had to ask you guys, I had to do polls and stuff. All right, so let's see what happens here. I have trimmed out the position. I'm up $42,000 today. Positive monthly res, that's good, that's good. Negative res, not good, not good. So negative res is going to supply resistance here, and this will probably supply resistance here. God, as much as this morning I want to be long 50 contracts to let it ride, we just don't have the evidence of that. DD ratio of 15 is just not that great. I don't believe that we get much higher than here today. Bear zone is really strong resistance with this being here. If you guys are opportunistic bears, let me tell you, this is a play. How many, not I'm advising you guys to short or anything, but how many people are going to try to short at pocket? 100% this is a short up here. This is like, if I hit that, I'm shorting the fuck out of this thing. 100%. You would like for me to keep trading with prop firms, Marcia? Well, no, the thing is that it doesn't matter if I trade with prop firms or not. I don't even do it on stream, so it's not like it matters to you. Like on stream, I've only just traded my real account, right? The only time I ever put a prop firm on stream was when I was trying to go live with Tradeify to help them get out the door. When Brett launched Tradeify, I helped Tradeify get out the door by streaming Tradeify when they first launched. And so that was like me helping a friend out, right? Brett and I, we go back. And I was like, Tradeify is fantastic. They're going to be a really good firm. And so I actually supported them because I trust Brett and I trust his team. And that was me doing that to help them get visibility as much as I could. Other than that, I've never really traded a prop account on stream ever. So you guys aren't really going to be any different here. It's not going to be a different experience for y'all because I don't even trade props on screen. All I do is show you the P&L from the props I trade. So it doesn't really, it's not even an educational purpose there. You don't even get to see me do it. So prop firms the exact same as live? Not really. Prop firms have all kind of rules that you don't like. A normal strategy that you use in a real account is not going to translate. I mean, you can translate. It's not going to be the same strategy you're going to use in a prop firm. And what you learn how to do in a prop firm will not survive in a real account. The metaphor I like to say is that you remember, like, you know, like when you go to a carnival and there's that one game where there's like the table with the little lip on it and they've got the metal milk jugs. You got to throw the softball and knock it over. Like a professional baseball player, a pitcher, will be able to knock those bottles over every time. So somebody that's a pro in the real world will beat the carnival game almost every time. But the carny that can hit that milk bottle every time can't go pitch for the Yankees. It's just never going to be that way. And the same thing in prop trading. The gimmicks and tricks you use in prop trading to like stagger your accounts and spread your risk out and use the low cost of failure as leverage to take extra risk and things like that. That stuff, you never use any of that in real trading. It doesn't translate. You can be a prop trading master and you're still going to suck ass at real trading. That's why you guys should never take a trading course from somebody that's a prop trader at all. Those are not trading skills. Unless you want to be good at prop trading, they better be teaching you how to game the system. Like I taught you guys how to spread your risk out and spread your accounts out and calculate the cost of failure so that you have 18 accounts, 15 of them blow up, and the 5 that won got you an ROI on the 15 that lost. This is really how you beat the system. And what's really funny is that all the smart traders out there that figured out how to beat the system, Brian and all these other people, they're smart. Stupid social media are trying to crucify people like that because they figured out the system. No one else is actually making any pull from these props, but the people that are figured out that if you throw enough money at it, you'll get a big return. They're completely gaming the casino, which is what I would be doing as well if I was actually serious about trading props. You throw as much money at it, you'll get a huge return. And there's almost a guaranteed return. It's almost stupid not to do that, but only really smart traders or math geniuses would see that. Majority of the population's like, well, I can't believe you spent 100K on props. And they're like, yeah, but I took 700 out. Prop trading is not about being a good trader. It's about beating the prop system. And people are starting to figure that out lately. And the prop firms are shooting themselves in the foot, at least to the smart people, by putting people on blast. When they put people on blast, all they're doing is telling you, this is the secret to beating this system. Almost at no risk. I mean, it's pretty easy to throw money at props until you get money out. If you brute force it, you can brute force millions of dollars out of it by putting millions of dollars in. It's almost impossible not to. You'd have to be completely reckless not to. If I were to buy infinite number of Apex accounts, and as the market's falling, I just all in long, then 40 points later, all in long, and 40 points later, all in long, 40 points later, all in long. The $20 losses are more than offset by the 2 or 3 accounts that made it. Then I pay the activation fee. Now I've got hundreds of PA accounts or whatever. Repeat the same thing. They cost you 200 bucks a pop. The one time you win, you've got $10,000. People have figured out that's how you make money from these things. I teach a boot camp. with that, by the way, on how to do that. It's prop trading is a carnival game. You have to spin the ball a certain way. You have to aim a certain way. You're not just trying to go in there and crush it as a trader. I learned that very quickly because I'm a math guy. I can see the math of this, and it just makes sense. Your friend Brute Force Apex a few years ago made millions and got banned. Yeah, like that's literally the way to do it. It's advantage play. They call it a casino advantage play. You're counting cards. You're beating the system that is. So the reason I tell you guys, if you want to learn actual trading, you need to watch it from an actual trader. How you manage account, how you manage a balance. That stuff is very important. There's no gimmicks here. You can't brute force this. You just got to be good at trading, right? You didn't think of that during the prop from Gold Rush? Dude, I know, like, there were people that figured it out early on. And I'm not knocking him for it. I think you're pretty brilliant if you figured that out. Jade Cap and Desi and all those guys that put big balances. They figured out how to beat the system, and there's nothing wrong with that. I'm one of the persons on their side. But everyone else out there is trying to sell you on the idea that they're just winning straight. Oh, I'm just a good trader. I'm just a good trader. They're all trying to game the system the same way. They're just hiding what they paid in because they don't want you to see that they're trading as a gimmick, because it would defeat their story that they're actually a good trader with something to teach, because they make money on that Discord. But in all honesty, they're not good traders and not anything to teach. I watched a podcast yesterday. Some fucking no-name clown guy got 3 million payout, 5 million payout. Don't learn a thing from these people, dude. Unless you got $1 million to put in, you're not taking 5 million out. And they put in $1 million, I'm sure. Nothing wrong with that, but don't learn trading from those people. It's not trading. It's just beating the props. It's not the same skill set. And people are starting to catch on to that. And I'm saying in props, you can gimmick it a little bit. Can't gimmick real trading. You're actually happy I'm done trading props? Well, I wasn't really doing it on the stream. It was just extra thing on my plate. So I've removed some things on my plate that are just taking up too much of my mental energy. The PW exposed that Tori doesn't even teach her own course. She hired some random Zoomer to teach it. Oh, I didn't even see that. This industry is cooked, man. You're already loving it, Sam. Hope to get the software access some point soon. Oh, I'm so glad that you're enjoying the boot camp, man. That's pretty cool. We're gonna start the live version of it probably early April. As soon as we get the prop site launched, right after that, I'm gonna use the boot camp concurrently to bring both of them in there. No more gnomes. Oh, I'll have some more gnomes at some point. Can you make a rebellious song called "Pop Your Props"? Oh, LOL, hilarious. Yeah, so normally, like, I'm trading some props off. My goal was, like, last year, I'm gonna go live in every prop just so I can see if I can do it. I ended up going live in 3 of them. Fun to Next, I got on the cusp of going live and they teased me with it, but it never happened. And then Take Profit, I just cashed out of all the accounts. So I don't think I'm gonna go live because I took everything out. But that being said, did I make a return on props? I did. What was my average return? Probably about 5x. I would say, is it worth your time? Yeah, it's 100% worth your time if you can't fund yourself and you learn how to trade props properly in the environment that is prop. You will be expected to throw money at it, but you'll get a return if you spread. Like, props is easier than real trading if you figure out how to do it. It's just your payouts limited. If you're a really good trader, you're gonna make a lot of money real trading. If you're a really good trader, you can adapt your trading strategy in props to get maybe a 5x return very quickly, and then you're capped. The thing with props, you'll understand there's a ceiling. You can only make so much total ever in the prop space, and you never make another dollar. Every single one of them, one by one, is going to cut you off at some point once you make too much money or whatever. The casino will say you can't play anymore. And so props not an infinite money printer. They're all going to either push you to live or cut you off or ban you or something. So at most, as a prop trader, you put in a couple $1 million and maybe you take 5 million out, and that's the ceiling. Nobody out there is making 10, 20 million from props. That makes sense. So that's the one thing, is that you have to learn trading if you want a sustainable career. Nobody's gonna keep printing money from props forever and ever and ever again. God, look at that little run there. I should just left a runner on the table. Hey, what's up, man? Welcome to the club, you guys. Enzo, what's up, Dada? Appreciate you guys. What about trailing drawdown? Trailing drawdown is the hardest of all the props to trade. That's the problem. Trailing drawdown is a gimmick that punishes you for winning the wrong way, which sounds really silly. Like if I make a trade and I long right here and the market goes up and pulls back a little bit, I'm still way green for the day. But in trailing drawdown, you've busted the account even though you've made a profit. And so it's an extra, like, it's like when you go to the carnival and you're trying to play basketball, right? To shoot the basket and you win the teddy bear, but the rim is sort of like slightly bent a little bit, so the ball barely fits in. It's kind of like that. It's like they're making the game a little shaky for you. So if you don't win it exactly perfect, you don't win it at all. And so trailing drawdown just is really hard. And you have to employ a specific strategy to survive in trailing drawdown. You can't brute force trailing drawdown because you can't just throw money at it and win, because you can even long and short at the same time and lose both accounts in trailing drawdown. You have to only trade when the market's not volatile and trending, which means any trailing drawdown account that you've been trading since October to now, you're going to get fucked because of volatility. You have to wait for non-volatile trending markets, and don't short either in trailing drawdown. Try to get long only trades in a bull market and you're going to win. You know what I'm saying? You want the market to move without any kind of pullback. Problem is downside markets get more volatile as they trade lower. Your probability of failure goes up the bigger the V's are from trailing drawdown, because you take bigger drawdown. When markets rally, the volatility becomes less and less and less. So your probability of failure goes down because the amount that it chops against you goes lower. Does everybody in chat understand that really quick? Markets sell off and become more volatile. Do we all understand that? And markets rally, become less volatile. If you're trying to win at an Apex, you're trying to win at a TPT, try to go for only bull setups with non-volatile, right? The blind monkey thing, yeah, because your probability is just higher that you win. Imagine that with an Apex, if you short at the wrong place, I mean, you could have just lost your account here even though you got in. But long markets don't do this. Like, they don't do that at all. Like, they become less volatile as they go up. You actually get punished less by just chasing. So for trailing drawdowns, wait for non-volatile. We teach VIX below contango midpoint. Non-volatile bull-only markets, never short in an Apex account. Never. If it's a sell-off day, just sit out that day. And you win more often than not by taking non-volatile longs on trailing drawdown. And you have to take base hits, one-to-one trades. So one-to-one trades. Don't try to go 2-to-1. Don't try to go 3-to-1. Don't try to get a runner. Make your non-volatile base hit, take your profit. That's how you beat it. That's the mathematically correct way to completely destroy Apex. So here's the way that you do it is you wait for long only markets. Here's how you beat Apex. Here's how you go cash out with Apex. Ready? Get as many accounts as you can. Again, don't use Apex, but how you beat them is you take as many accounts as you can buy when they have a sale only, 90% off. Get those things for what, $15, right? Whatever they cost. And then it hits your target. Let's say that you get the 100K accounts. It hits your target, long 2 contracts. It hits the next target, account 1 hit with 2. So when it's falling, let's just say it's falling to every target, okay? Long only, 2 contracts there, account 2, 2 contracts, account 3, 2 contracts, account 4, 2 contracts. If you really want to stack these things up, throw 5 accounts at each. It's $100 to fail, and eventually one of them is going to pivot. So you blew up 15, you saved 5. Okay, that's the $150 activation or whatever. The whole endeavor cost you, what is it? 20 times 15, $300 plus 4 activation fees. I don't know what the total cost is. For activation fees, another $600 equals $900. So you spend $900. That's it. Now you got 5 PA accounts or whatever. You spend like $1,000. Now you got 5 PA accounts. Cost you $200 an account. Congratulations. All you need to do is make $200 in profit across those 5 accounts and you broke even. How easy is that? Your very first trade. Just wait and just wait and just wait and just wait. As a matter of fact, you can take those 5 accounts and do the same thing. You only need to make $1,000 to go forward. and take those 5 PA accounts, long 2 contracts here and 2 contracts there and 2 contracts there and 2 contracts there, and blow up all of them except for one. And the one that makes money is always going to be greater than the ones you blew up. You can profit by taking that strategy every time by buying dips in a non-volatile market. You get an ROI almost every time. What's up? Thank you. They don't like that I teach you that, by the way. I teach that in my bootcamp. It's just it's a gimmick on how you can beat the system. Thank you. You use, and it only works when there's a sale, but it's a low cost of entry. You think these guys that have 20, accounts, how much money they threw in to get it? They had the 30 MAE that's annoying. Yeah, and so it doesn't even matter if you hit the MAE that busts. One of your accounts is bound to hit one of the pivots and just go up. Now again, like I said, this is just like, I'm the math guy that tells you how to count cards in the casino. 98% of people out there, they're not smart enough to understand this, like the prop teachers and stuff. But the 2 people that do are the ones pulling $1 million payouts. That's how they do it. I'm not calling any names or anything, but I'm friends with everybody out there that's doing it. We talk about how they do it. We laugh about how we do it. I don't do it, but they do. We all like share with each other. This is how you beat this firm. This is how you beat that firm. Oh, hell yeah, that's cool. Thanks for sharing me, bro. This is what you figured out. Cool. There's a whole network of that. We all know, like, the goal is ROI, and we know it. It's a rich man's trick. Well, again, that's just one way of doing it, but that's what a lot of these people were doing. And I think it backfired on Apex, and they're trying to put people on blast. All they did was reveal that it's almost like a super low risk return, because the cost of, in trading you can't do that because the cost of failure is very high. On Apex, the cost of failure is 20 bucks. You just need one account to make thousands of dollars just throwing longs at the market. The market will swing through some longs. One account can make back the loss of 19 failures. I mean, that's the math of it. Not saying that you should do that, but that is the math. It's mathematically correct. You got a mathematician here teaching you that. They don't like when you tell them how to count cards in the casino. They don't like you. Like when you do that, but how does one gain access to such a network? Well, it's kind of like this, right? All high stakes traders out there, everyone knows each other and they're kind of cool with each other about it. People are mostly secretive about how they make their money in life. You're going to learn that in general. Nobody that's a millionaire is going to pull you aside and be like, by the way, let me teach you how to become a millionaire, brother. You and me together. Feel very secretive about it. But if they know that you're doing it and they're doing it and you're all making money together, people tend to like network with like-minded folks. Like pro poker players share their tricks with each other. How much for our charting, Levi? It's $99 for the first month and then $159 every other month. And that includes boot camp as well, all in that one place. I want you to keep jabbing, yeah. So the point I'm saying is that just to teach you guys why I'm not trading props on screen anymore, I just have to cut something out of my diet. I'm too overworked. I'm trying to naturally bring my health back in check. And my doctor's just like, you need to cut some things off your plate. You need a break. You need a vacation more, relax more. Or maybe I should long at MHP. It's very possible that I could get one more trade here. I don't know. What do y'all think? Do I touch it or I take my 42K and run? I'm teaching you guys how to be millionaires. I think that's part of what I want to teach y'all how to do. Wealth growth is such a slow thing at first, but it starts to compound later on in life. If you start early, you'll be like me in your 40s and be 10 times farther ahead than I am. I started late in life with wealth accumulation. Remember, I was 28 years old when I started trading. I was broke, had nothing to my name but my severance package when I got laid off as a chemical engineer. Laid off in the financial crisis with not a dollar to my name. Got a severance package. That's the only money I had. And so a lot of you guys starting trading in your 20s, man, you can start getting ahead way faster than I did. Do you ever trade a mean reversion from MHP or HP, meaning that when price is a certain distance away from it, price will turn and trade back to it? I usually give myself 1 strike distance of overshoot for that particular reason, beast mode. So in a non-volatile environment, it's going to be 40 points of NASDAQ, like overshoot 40, trade it right back to it, yes. S&P 10. If arbitrage is bigger than those 2 numbers, then I'll use what arbitrage says. If arbitrage says 60, then I'll give it 60. These stories are awesome. Oh, thank you. I think I should show live trading with a smaller account with micros and risk management. It's about to be a smaller account whenever the withdrawal hits. Your family is super poor growing up, 1 bed, 1 bathroom house, or 5 people. You didn't start really going until your parents were 45, and then just buying bad land and turning it over. It took time. Dude, that's such a cool story, man. I love it. I love it so much. I grew up in a 2-bedroom apartment with a single mom, and my brother and I shared a room until I was in college. I never had my own bedroom as a kid. Well, when I was a kid, I did. My parents split up when I was like 12 or 11. I was in like 5th grade or something. But from that point forward, me and my brother shared a bedroom in a very, very, very inexpensive 2-bedroom apartment where if you left your bike unchained, it would get stolen. Apartments get broken into all the time. Wasn't a bad part of town. It just was low income area, so you know, a little sketchy when it comes to like your stuff getting stolen. So we came from nothing. Nothing. I started working when I was 13 years old. My first job, I was 13 years old. Helped my mom pay bills. I worked at the baseball field. So my brother and I were baseball players. We're both athletes. I was playing football. I was quarterback on my team. So I was a big football player when I was a kid. My brother was a baseball player. My little brother actually played for the Giants. He went pro. He's already retired, but he played for the Giants. And he used to play at the baseball field, you know, multiple times a week. And so we were all like big, you know, so I took 2 jobs actually as a 13-year-old kid. One is I worked in the concession stand making $10 a game. So I would just sell, you know, hot dogs and candy and whatever and make $10 a game. And then other times I was announcing. I would make like $20 a game. So I would be the announcer, like next up to bat, blah, 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 me at 13 years old. So I had 2 jobs as a kid and I'd give that money to my mom. And they would use it to like, you know, because baseball equipment and gear was expensive and stuff. So they would use it to buy it. I still saw my dad a lot when I was a kid. I just didn't live with my dad. I lived with my mom. My brother lived at both places. And the only reason I didn't live with my dad was because I had so much stuff as a kid. Me being a geek, I built computers. I had music equipment. I couldn't like my brother could just pack a bag of clothes and go hang out with my dad, you know, for the weekend or whatever. My brother would spend a week here, a week there, or 2 weeks there and 2 weeks there sort of thing. I had like a piano, a bunch of guitars, a bunch of computers, computer parts everywhere. So like I couldn't like transport my geek life from one house to the other. So I just visited my dad a lot, but I never stayed there. Isn't my dad rich? No, I would say my dad is not wealthy at all. No, my dad was a phone man. He was a cable splicer for Southwestern Bell when he started off. Cable splicer. They go in the sewers and they fix the broken cables and put the cables. I don't know if you guys know what a cable splicer is, but you see the guys up on the telephone poles fixing the cables. That's what my dad did. He did that for a while as a kid right out of high school, and then he stayed with Bell till his retirement and became AT&T. And we worked at AT&T. He advanced through the ranks. Never went to college, but my dad advanced through the ranks. Just old school way, just being dedicated and being good at your job. By the end of his career, he was an executive at AT&T. He was the national lead for DSL. You guys remember DSL? Before broadband came out, everyone had DSL. Well, when broadband came out, there still was DSL. People still use it all over, like rural areas. It's still out there where broadband isn't. So my dad became the like the national or regional or something. He was like the director of almost all the DSL projects. They still had some. So he basically worked his way all the way up to the company. He started off working in the stinky manholes, ended up working at cushy corporate office by the end of his career. Oh, and he got a nice ass pension when he retired. I think so. Your dad spliced cables at Transatlantic? Oh, hell yeah, dude. Very cool, very cool. We know what DSL is. Yeah, you recently were laid off from AT&T. You're a fire inspector for 12 years. Now you're at home trying to trade these crazy markets. Oh, that's cool, bro. That's awesome. Gonna get your businesses off the ground soon. I'm rooting for you, man. I'm really rooting for you. Nothing is more liberating in this life. I don't care if you're broke. Nothing feels better in life than to have your own thing, and it's worth suffering through. I'll tell you somebody that's done it so many times. It is worth suffering through to build your own thing. That is the most liberating feeling in the world. It's yours, dude. It's yours. No one can take it from you. No one can tell you what to do. Nobody can tell you your ideas are bad. Nobody can tell you their ideas are better. It's yours, man. 100% yours. I'm very skeptical of this market today. The way that it's looking right now, I'm not taking the long on MHP. No. We've already failed an MHP break right now on S&P. It's pulling back. People have no clue how hard entrepreneurship is. It's as equally hard as it is addicting. And that's the problem about it. That's why my doctor has to tell me to cut back. I love it. I remember when I used to struggle building one business, and it was like overwhelming. I've gotten so efficient, I'm simultaneously building 4 right now. I've got it down to a science, but it becomes like addicting, but it's draining at the same time. It's a lot of work. It's a lot of work. This is IDOC's first time, and it's kind of neat because this is my first time really mentoring somebody. And she's really good. She's really smart, and she's really good. But I'm like, I can see like where I was getting started. So her first business, she's so much farther ahead than I ever was. She's got a natural instinct for it. But I also get to serve as kind of like a mentor of like little things you need to do and how you need to structure and order stuff to overlap things so that it's efficient. And I was like, so by the way, we just filled out, you know, she's like, what do we do? And I'm like, oh, well, we need to file our corporate filings. So let's get the lawyer to set that up. And as soon as we get the EIN number and we get all that and we get the articles of incorporation, we need to take that to the bank and open up the business account and get the business credit card, ABC. She's like, oh, wow, I never would have thought of that. I was like, if you don't do it all in a certain order, you're always going to be behind. It's going to take like so much time. But we're at the stages of like, rule number 1 of building anything is that nothing ever is like finish, then work on this, then work on this, then work on this. In any kind of business you're ever doing, everything is always simultaneously 80% complete. There's always a bunch of overlap. You're working on something at the same time you're working on something else, at the same time you're working on something else. And everybody's waiting on the completed piece from someone else who's waiting on the completed piece from someone else who's waiting on the completed piece from the first time. So at any given time in business, everything you're doing is always about 80% done at the same time. And then somehow it all becomes 92%. It's never like one task is 0 to 100, another task is 0 to 100. You never work like this. 80% is almost complete. You kind of have to do everything all at once, the best you can with the best gas you have. You don't have the blueprints, that's okay. Sketch it out anyways, because you need to get an estimate about how much it's going to cost. Well, why? Because you need an SBA loan for the construction. And they won't go out there and give you the loan until they know exactly how much it's going to cost. So they're both waiting on each other. So you have to kind of like iterate between the two. You know, it's like the landlord won't sign the deal with you unless they know how much your build out's going to be, because they're going to give you a builder's credit. And so everybody's waiting on everyone else. So it's kind of like one of those, if the first time you take it and you take a linear approach to finishing something, you're going to take 10 times longer than you need to. And when you're an entrepreneur, time is money. Every minute you're not open is a minute you're losing money. So anyways, it's kind of cool in this situation to be a mentor to somebody for the first time ever in that aspect. I'll tell you really quick, IDOC's really good at business. She's getting it. She's very quick at it. But the one thing that she isn't kind of catching on to just yet, because it does take experience to realize this, is that whenever you're in a franchise, because we're franchising this thing, She comes from the corporate world, where the corporate world, you need to be an expert. You need to know exactly what you're doing, and they hired you to be the expert, right? You need to do your job well, and if you don't do your job well, your boss is not going to like you, sort of thing. And so, but in the instance of being a franchisor, the franchisee is not really your boss that's looking down on you like you don't know something, like they're going to look down on you. She's very much like scared to ask for help from the franchisor. Thinking that like, I don't want her to think that, you know, I don't know what I'm doing. And I'm like, no, you should literally bug the shit out of her all the time. She already signed us. We're already cleared. It's not like I don't want to go to my boss. I need to solve this on my own. That's the problem. When you're a franchisor, you want to bug the shit out of your franchisee. You want to bug the shit out of your franchisor because they want you to succeed, you know? So I'm like, trust me, you don't have to solve everything on your own. She's like, I feel like I'm bugging her though by asking her so much. I'm like, never stop asking her questions. That's exactly what she wants. She succeeds when you succeed. She's going to be your mentor along the way. And she's like, oh yeah, I get it. You know what I mean? Yeah, the franchisor is the one that sent us the $220,000 roses. Yep. Pretty much. Do I want to long at MHP? I could. It's trying to rally here. I don't have a lot of strong evidence to jump in on this. I could still keep taking stabs at it. Negative resilience, not really. Yeah. So basically, I'm trying to tell her, I was like, don't worry about it. You don't have to go to her, and it's not like when you're boss. When you go to a boss, you're like, hey, I finished my work, and the boss goes, oh, congratulations, good job. It's more like you don't want to go there and say, hey, I figured everything out on my own, and she's gonna say, oh, good job. They're actually gonna not like that because they want you to adhere to the corporate model that they're trying to build. They want you to like bug the shit out of them and learn everything you can about it. So I was like, trust me, call her every day. You need to run everything by her, be involved. She's expecting it. Like, okay. It's a shift from corporate mindset to franchisee mindset. Like if people are franchising my business, you better call me every morning and tell me your plans. I want to be there every step of the way because I'm not gonna let you mess it up. You know what I mean? You don't have to come to me and be like, hey, I figured it all out, bro. And I'm like, oh, I'm super impressed. Cool. You're independently operating. It's not how I would want it to be. Pick of the roses. Okay, hold on. Yeah, I want to see the roses she sent. Long trades are still strong enough today, but they're not like super strong. This right here. Those roses were like if I stood them on the ground, they were this tall. Like literally this tall. Isn't that crazy? I am a control freak, somebody said. There were those Ecuadorian roses. Like literally the stems were like over 3 feet long. Oh man, there's not strong evidence to jump in on this. But I think the market is trying to make a move. It's almost like a gamble to trade this. It's breaking structure left and right. It shouldn't be breaking, but it's breaking. It's overshooting and selling off. There's competing signals. If anything, it's probably smart for me not to do anything. It's going to be one of those moments where in a moment's notice, it's just like this or it's like that. And it feels very much like a coin flip. That's why I'm not approaching it. But I've scalped that. I've scalped that. You have a bunch of mixed signals: resistance, support, and you've got mixed signals here and really bad signal there. Super choppy, super crazy, right? Yeah, res is extremely bad. Like, yeah, I'm gonna short the upper half gap one more time. That would be such a... Can I short negative resilience? Bear zone resistance? I could take a stab at it. Let's keep it small though. I don't know if that's the best short in the world, but I've got this area and this area as resistance. It's probably not the best idea, but we are sort of trapped between these two areas right here. Why not? It's with 4 contracts, it's pretty small. But there's a little bit of power there. The problem is with the indicators and the structure breaking, it just seems to be like delayed responses, right? Like overshooting when it shouldn't and stuff like this. This overshot more than 10 points when Arb didn't pick it up. There's not really a lot of strong structure points here, so I don't think this is the big reversal today. What do y'all think? We'll see. I'll get squeezed in the next 5 minutes if I'm wrong. Music too loud? Oh, my bad. Matt fires up the rocket scooter. Get some cooter. Taking trades while you're getting AIDS, dude. Sniffing paint. The trades back and they stink. Turn around your stream, you get a whiff of taint. Hedge pressure. Whoa, whoa. Edge pressure. I go hard at half gap. I go harder at MP or HP. You other traders PP. Mark a blunt, but I got high BP. The best line ever. I would smoke a blunt, but I got high BP. Dude, Mike, that was so well written, bro. Like, I would spark a blunt, but I got high BP. Yeah. Did you write that yourself or did AI come up with that? That's so witty and clever, man. There's your doo-doo. Reconsider that rap career. Don't tell me what I can't do. Don't tell me what I can't do. Oh, Bugs Bunny. Make my tummy feel funny. Never do. All right, 5,000. Pocket that. I can do it, man. My mom says I'm special. Am I the gingerbread man? Yeah, probably. Turn on your stream and get a whiff of taint. Hedge pressure. Pet Bickle. Oh yeah, he goes, I go hard at half gap, I go harder at LP. Might bet the house. Hold on. He goes, oh, I might bet the house if price hits DD, you other traders PP. Do you know the Muffin Man? Probably. Is MHP like a point of control? It's similar to a point of control, but what it actually is, it's the maximum gamma exposure of dealers. Dealers sold options to market makers. So it's 100% hedge neutral option. Risk cluster is in the middle. So essentially what hedge pressure is, MHP is monthly hedge pressure. Because it's maximum gamma exposure of options that will be hedged to neutral. Gamma is the, let me start over. Delta, right? Delta is the del price over del price of the underlying. Del price option, del price underlying, a constant constant time. Okay, so this is it's a partial differential equation from Black-Scholes. Delta with options has to do with how much the option gains in premium through a linear change in price of the underlying. So it's the slope, right? So essentially, if Apple goes up X% and delta is 50, then the option will go up 50% of that X%. So if it's 2%, then it goes up 1 to 2, and your delta is that. So gamma is the second it's the first derivative of delta, so it's the second derivative. That again, math, right? But basically, if you want an easier way to understand this, this is the acceleration of that price change. So if delta is the slope at any given moment, gamma is the acceleration at any given moment. So it's kind of like thinking like you have a ball rolling down a hill. The ball has a position. It has a speed at any snapshot you take. It's going a certain speed. But then as gravity's pulling on it, that speed's getting bigger and bigger and bigger and bigger and faster as it progresses down the hill, right? So you have position, speed, and acceleration. In the options world, it's pretty simple. You have price, you have speed, and you have acceleration. That's exactly what they are. It's the same sort of equation. So gamma is the acceleration of price change. It's like how fast you're pushing the accelerator. If you just put the accelerator down at a constant place, right, you push it, your car is going to start speeding up and accelerating. So you're going to have both factors at once. Delta is the greatest, is your actual speed, and acceleration is how much that speed is changing. And so what gamma exposure actually is, it's the maximum acceleration of price change. What does that even mean, right? Like you're asking, like, what does this even mean? In an applicable sense, let me boil it down to one word. If you're hedging an option to neutral, you're buying shares against your sold options risk. If I sell a call goes in the money, I owe someone 100 shares. So I better buy those shares in case they exercise the option on me. If I've sold a call or sold a put, I need to have some kind of risk by accumulating the underlying. How fast do I need to accumulate the underlying? Well, that's delta. How quickly is that delta going to change? Well, that's here. So this is a fancy word by saying, if you hear people say gamma exposure, they may not even know what they're saying. Gamma maximum is the same thing as maximum volume due to hedging. It's guaranteed volume due to hedging because it's not only the speed of hedging, but it's the acceleration of that. So when you hit hedge pressure, you will see volume spikes every single time due to that sort of like, imagine price is getting close to something and you hear an engine in the back of your head. Price is getting close to hedge pressure. It's like a hum. Pretend like this is where hedge pressure is. You think of it like that, you're never going to forget. Price. You're pushing down the accelerator. Like that. Volume goes like that. It just happens. Volume go burr. It happens to be how much volume flow happens. Pretty good. I never thought of doing the car analogy. It kind of makes sense when you do that. When you approach it, you're just like that. Unless you drive a Tesla, and that's gonna go. I do a Maserati impression. Oh, dude, the Maserati engines before 2020 when they had the Ferrari engine in it. Oh, dude. They had such a good sound. It's such a distinct sound. My old Maz was such a cool sound. 100% what it sounds like. I could always tell when the valets were picking up my car in the garage because I could tell when they turn it on. It's just completely distinct sound. It's different than the Aston Martin has a traditional twin turbo V8. It sounds like a Porsche. They all sound the same. Whoa! It's real scratchy like that. But the the Maz, whoa, it sounded like a howl. It's different. So anyways. Whoa. But when you turn it, I was like, whoa. Not making it up. IDOC used to say, like, you do such a great impression of your car. I was like, yeah, I know. Anyways, hedge pressure is going to be acceleration due to hedging. And so what happens is you get an accelerated volume flow when you get close to it. So essentially it's a guaranteed high volume pivot. So you can calculate that accelerated risk. You see how when you get close to it, there's just this magical volume that appears right at the level. So what we use it for is like a point of control, to answer your question, a long-winded answer. It's like a point of control, but it's not like what you traditionally would think of point of control as like a magnet for price. What it actually is like a flux. So whenever you're approaching hedge pressure from this side, there's more longing than shorting above this level. And when you break to the other side, there's more shorting than longing. And the amount is much higher here. So like the difference, let's give you some numbers. If there was 1,000 longs for every 100 shorts, then the further away you are, it gets less and less. There's still more longs than shorts, but it's less. So when you get really close to it from the top, the difference between longing and shorting is the maximum. You get the maximum amount of long pressure pushing you away from it relative to the imbalance. So right above monthly hedge pressure is the maximum long imbalance due to hedging. Right below monthly hedge pressure is the maximum short imbalance due to hedging, which is why when you flip through it, is violent. Any stock, anything that has MHP break, looks like we can look up Meta because Meta had MHP break today. Anytime you break through MHP, volume goes crazy. Just in a relative sense, you can see that like when Meta is touching it, you see how the volume doubles right there. And this is reference data. We don't even buy 100% of the New York Stock Exchange stock volume. We buy 5%. That's why the candles look all wiry and weird. But that's just, we don't trade stocks here. But when you break through it, volume starts to accelerate, become irrational because you flip all those longs to the short side. So as a trader, MHP is one of your strongest pivots to trade from, as you see today. It was a great deciding factor. Somebody said I made $5,000 in 3 minutes. Yeah. Well, I mean, it's just like I said. I don't want to do too much today. It's just not super tradable. Yeah. So if you're a longer term bull, this is monthly. Cat line today. Not today, brother, but I can do one for you. There is no catalyst today because there hasn't really been a straight irrational run. We've sort of like not run that distance, but I'll do one blackout. Thank you for the dono at $10. Appreciate that. I'll do one if it does turn out. The first thing I'll do. The red light. Let me demonstrate yesterday's though. Okay, I'll do one from yesterday. Yeah. So what you do is you go to a tick chart. I use it like a 233 is probably good. There's no magic to what you pick. Just something that's less than 1,000. That's not too small. And you can see the orders. So in this case, what you're looking for is, again, you're using a little subjectivity, but you're using your eyeballs here. You're looking for a time where the price, there's just the two principles that we have here. When price goes down, market's looking for sellers, and price goes up, market's looking for buyers. That's the reason price moves. So when price moves down, then you have more sellers and buyers. We call it a sell imbalance, okay? So market's falling to look for the buyers, and they're going to drop the price until buyers are found. When there's more buyers than sellers, that's called a buy imbalance. Sim and bim. So too many sellers. Oh, too many buyers. Okay, so the next logical step, buyers and sellers need to find each other. Let's move to the middle. That's traditional liquidity search. Hold on. Ooh. Get 20 square. Maybe 15 square feet. Hold on. I'm going to plant some sod today. Take the Mercedes. LOL. Remember I told you guys I have a rental car right now, right? Because the Aston's in the shop getting the electricals fixed. They gave us... Oh, yeah. Okay. Yeah. Use the wrap. Okay, wait. Okay. Okay. They gave us this like entry-level Mercedes that I was like, oh, cool. So now I can actually use the rental car to go pick up sod. I got to plant some San Augustine in the back. I was like, just take the Mercedes. She's like, well, I can actually take my car because she's about to lose her car. She has a no, not a G-Wagon. No. It's a rental. It's a loaner. Sorry, not a rental. Since my car's in the shop, part of the services they give you a loaner, but all the DBXs, which is what they do loan out, Aston Martins, have been loaned out. So they gave me this random entry level SUV. It's not even. It's like as base level as it gets. So I told her, I was like, just use the Mercedes. That way we don't get the Maserati dirty. I was like, take the loaner car to pick up the grass. She was laughing. She's like, no, I'll just take the RAV4. Because she's about to lose that car anyways this week because she changed jobs. And so they're taking the company car back. Oh, the other song? Okay, I'll play the other song again. This one, okay. Anyways, so I'm gonna be planting some grass later today. I was like, cool. Let's just get the loaner car dirty. This is the second time I've had to take the car into the shop. What's up, baby? Is it?
Yeah.
What kind was it?
It's big. SUV.
It's not a G-Wagon, guys. It's like a.
I had to.
It's like an Escalade size. It's huge.
I had to ask.
There's no bells and whistles on it though. On the inside, it just looks like a, you know what I mean? Like there's no fancy trim or anything. It just looks like a. I went in it for a minute, yeah. What kind of SUV is it? Let me see. I took a photo of it. It looks like a big mommy car.
Yeah.
Oh, I didn't take a picture of the back.
Oh, you did see.
Oh, I did take a picture of the inside.
Oh, is it an electric car?
I don't know if it's an electric car.
That's what our neighbor's car looks like, and that's.
Is it an electric car? You see how the inside, look, it just looks like extremely basic. Yeah, like there's like a radio on it. I'm not kidding you guys. Look, I'm gonna show you a picture from my phone. Like, I'm telling you, when I say entry level, look, this is the dash. Look, it's got like an AM/FM radio on it. I swear. Look, there's a cup holder. That's the most highest technology they have on this, and there's a little place for your phone. There's no panel. There's no. When I say it's basic, there's no panel or anything. Oh, there is above it. Yeah.
Yeah, that whole screen. You didn't turn it on, did you?
No, I'm just kidding. There's not an AM/FM radio. No, I never turned it on, but there's a couple buttons. A cassette player. Oh, that'd be dope. Did you get it dirty? No, just take the RAV4. You're gonna get the sod. I think I need 30 square feet, but if they might be selling out, you gotta go quick.
Yeah. I'll go after.
Okay, if you can, and they'll do it for you. You don't need to scoop the sod in. When it goes to there, they do it for you.
In the bag.
I would take trash bags.
Okay.
Sod will be. It's not gonna break apart. It's gonna be on like a little. They're gonna scoop it up and set it.
30 box.
I think they come in. I think they come in maybe 18 inches. I don't really know. So just tell the. I mean, we might be able to get away with 20.
Okay.
But I basically need 30 would be like a little patch by the garden plus the little area right by the rocks.
Okay. Ask for that.
I'll go get that later.
Okay.
Yeah, I need sand. I'm gonna do like a sand and topsoil mix because we have to regrade the backyard. So I think you would do like maybe like 60% sand and maybe like 40% topsoil. I'll figure out what we need to do for this type of soil type and clay type we have.
I called. I don't
That's what I told. Okay, so I told you last week, right? The gardeners and landscapers go there the moment they open. You have to be there before it opens. What time do they open? The garden center opens at 9.
Yeah.
You got to be there before it opens. Before it opens. No, they open at 9.
I also didn't.
Yeah, because all the landscapers go there and they clean it out.
Yeah. I didn't.
That's okay. It's okay. We'll do your meeting, babe. Like, don't worry about it. It's just, I don't, because the pickle keeps running that mud over there. That's why I'm trying to.
Yeah.
Oh, I know. If you get bored later, would you track down some sod for me?
Yeah.
Yeah. Yeah, when I went last time, dude, they cleaned out. Like, they were like, oh, yeah, because all the landscaping. Ask, what's his face where he got it from?
Oh.
What's the guy's name? Yeah. Thanks, honey beer. Dude, there's a mud patch in the backyard. I gotta regrade the. All right, let's get a giveaway in a little bit. Let me finish the lesson though. Sorry about that. I'm telling you, we can't get fresh grass anywhere. They sell out the minute they get the shipments in. No, we're good. Like, the thing is that Pickle goes outside and he gets his paws muddy and he comes in and ruins the white couch. Ordered online, yeah. If your son loves Minecraft, tell them to regret it. All right, sorry about it. All right, back to the lesson. Where the red lines and stuff come from, what you're looking for is when a sell imbalance and a buy imbalance, the next logical step is the middle, and we call that liquidity, right? When sellers and buyers are at the same equal rate of approaching the market's liquid. So the market is always on a quest of, okay, there's more sellers and buyers. Oh, there's more buyers and sellers. Okay, we're now liquid. Cool. So if you see a move that goes like this and tries to make its way to the middle, but continues to fall, and there was the middle, then the sellers that met the buyers, there truly wasn't a buy imbalance because it was still overwhelmed by the sellers. So when you see two layers of a sell imbalance, you need to flag that. This is called the anchor point, which proves that something has happened. We call it anchor point. Something has happened at that moment in time, and you need to look for that. Looking for a move that refuses to find liquidity and keeps going. Then what you're trying to do is finding where that maximum sell imbalance is, which means the maximum illiquidity. And when markets are liquid, the more liquid a market is, the less volatile it is. So they're equal and opposite. Like, liquid markets are not that choppy. They're really tight. Volatile markets are illiquid. They tend to bounce around a lot more. So the maximum amount of sell imbalance is the maximum amount of illiquidity, or the maximum amount of volatility. So you're looking for like where that volatility gets the worst and sort of chills out before it keeps moving again. So you're looking for like a spike in volatility, and you can see it on a tick chart. That's why we use a tick chart, because you can see those orders themselves, and you're looking for that maximum beat, and it just so happens to be this little area right here, right? So you're looking for the maximum sell imbalance before the buyers are found, which is here. The maximum point of illiquidity this moment in time. You're looking for that point and this point, and that's how you do the calculation. And I'll tell you all the rest of it. So to identify that anchor point, it's very simple, right? And so we can draw it over here. This guy, sell imbalance. Let me pick a color that's like easier to see in this chart. All right, sell imbalance, buy imbalance hits the middle. Okay, so anytime you hit the middle, then it doesn't qualify. Sell imbalance, buy imbalance, hit the middle. Nope, not that either. Sell imbalance here. Further sell imbalance. Perfect. This did not hit the middle, which is probably there. Awesome. So now we've identified the anchor point. This is the moment in time that shit hit the fan, right? So from here, you're looking for that maximum amount of volatility before things dry up again. We see that there's a V-shaped move here. We see that there's a V-shaped move here. Everybody understand where I'm at so far? In chat, can y'all tell me give me some yeses or nos? Y'all cool? Do we all agree that this is the maximum sell imbalance point, anchor point, and this is the maximum volatility here? My bad, learning music a little bit. Yes, sir. Okay. So what's important is to know that here and here, we find just the middle of that range, and that's a high volume pivot. It's a guaranteed high volume pivot. But we've also marked the anchor point, which is here. Once you've marked that anchor point, you take one more step. So we have this, we have this, we have the middle. This is your AP, and we call this an illiquidity pivot. So we call it an IP or illiquidity pivot. Either way, this is a high volume pivot in another day. The last thing you do from your anchor point is you measure a distance down from there and then you draw a line. What is that distance? It's just, we give it to you in the table here. This is actually looking pretty solid now. Do I want to jump in on this? I kind of like the way that it's looking. Let me see what the VIX is doing. I kind of want to jump in on the long here. Hold on. VIX in decline. But resilience is still negative though. Hold on. Nah. I'm not gonna do it. Okay, back to the lesson. Okay, so the table, right? When you go here to this table, you're gonna go down to whatever contract you're trading. In that example, we're doing NASDAQ, right? So let's go to NASDAQ. You'll get this value called risk interval. It's right here. And NASDAQ's risk interval, sorry, y'all can't see that. Let me put this on the screen here. I'm telling you guys, when you go in the spring, it's so impossible to get San Augustine grass because it's like the landscapers buy it all up. That's why we're like, it's almost like going to freaking GameStop for like Halo 3 release. You got to be there at midnight. Okay, risk interval 253. So then what you do for the catalyst line, so somebody that was asking how to do it, you're going to take your anchor point. So we found the anchor point, we found the volatility maximum before it dried up. And then we're going to do the anchor point, right? Minus 253. So when you do 148, what the risk interval is, it's a CME thing that provides another high volume pivot. 25 minus 253. 24,895. So from there, you'll draw a catalyst line, which is one risk interval from your anchor point, and this actually creates, this is a very cool trick when you guys learn how to do this, 895. That's what this red line actually is here. Which you will see almost every single time when markets fall and an illiquid run like that, it moves one risk interval before it holds for a little bit. And it's to the penny. I mean, it's exact. This is a CME structure thing. And that's where that number comes from. And you can see that like we fell exactly to that level. And then when you zoom out and you go to like an actual time chart rather than a tick chart, the cat line is also a high volume pivot, just like hedge pressure is, except it's bigger. Like this song here. You see this? See all that volume here? So whenever you break through that, the market can cascade into massive amounts of margin calls. Breaking through that pink line is huge volume as well. So it's a guaranteed high volume pivot as well, that on the other side of it, the market just goes crazy. It's like yesterday, right? Like breaking through the cat active line, you see how it just catalyzes a further move that just sold off and crashed out? That's what that does. So you can calculate that exact phenomenon to the dollar, to the tick. Look at me wanting to be in on a long here. To the gap fill, let's go. But that's how you do it. So this cat active line is a high volume pivot for the day and then it disappears. These red lines are high volume pivots the entirety of the move. So like, let me give you guys one more example of this. Here's your sort of like this guy right here. Maximum volatility here. Here's your anchor point. And here's that red line I was talking about. We call those illiquidity pivots. It's right there and it got touched, so we delete it. See, look at me like saying I wanted to grab them long here. Whatever. I should have bought it. Dude, we've gone up 100 points. No. 80 points in 5 minutes. I don't know, man. I still got an iffy feeling about this one. As much as I keep telling myself I want to jump in for the big rally up, all the Fed did was confirm how bad the economic data is going to be this year. I wouldn't be surprised if it continues to sell for the rest of the day. After we break through highs and hit the top bear zone up here, maybe gap fill. But longer term resistances are right up here. Remember, we drew these? This is longer term bear market. So if you are super bearish, we hit 660, we turn around. Oh, Nasdaq is so far away. They look relative, right? Okay, I'm in. Let me take it with a medium heavy S&P bet. This is just the bet that we're continuing to decline. This is the bear zone top on monthly maps. I'll be right back. I'm taking my phone because I'm gonna take a leak. I shorted at the bear zone top with DD ratio at 0.16, and that's also the same place the bear zone top on monthly maps. It's a good resistance, but I don't know if it's going to play out. So this is betting on perpetual bear market. Right here, hitting that bear zone top today. Space. God, man, this has been pretty fucking straightforward all day. Again, I can just take the scalp and be happy with it. There's not a lot of volatility, which is why I don't want to stay short for long. If you look at the VIX, it's in decay, so we're not really seeing any pullback. Oops. Sorry, we're not seeing any movement on the VIX. It's pulling back. Sorry, I said that wrong. VIX in decay is not, it's liquid enough for a squeeze, right? My evidence that I have right now, again, I could get squeezed. ED ratio less than half. This is resistance. Resilience less than 0. This is resistance. Monthly hedge pressure is support. That's why we're bouncing between these two levels, so. As much as it looks like it's trying to build, the greater market, if we break through here and keep going, we flip to the bull side. So this is the 3 month. Sorry, this is the month-long resistance. So this is resistance both on the daily and on the month. So if the market is bearish and you are bearish this economy, we're continuing to drift down at a pace like that over the course of the day. If you are a bull, then you want to break the 660 level and keep going. These are like pre-expiration short squeeze. Remember, we expire monthly options tomorrow. So you just get some people taking profit on their shorts probably. Do I think there's momentum to sell off today? Probably not, but it can start building that up. Flowers, flowers. Yeah, I took my phone with me that time. All right, let's do giveaway, you guys. Giveaway time. The Fed seems to believe that inflation effects are temporary. The tariffs are like a one-time thing, so once they hit, they're done, and we're going to be good after that. Go ahead and type in ETF. Our first giveaway today is going to be with Elite Trader Funding. Our giveaways are sponsored by our partners. Like we're going to range today? Probably so, yeah.
Resilience hums beneath it all. Whispers that shout when the patterns stall. In the chaos we rise, rockets scooter the ride. Every edge of flame, every map a guide. When the noise breaks loud, I still hear the call. Every single time we survive the fall. Pockets formed where the currents sway, shaping roads in a radiant way. Pressure bends, but it won't break. Rocket scooter leads every step I take. LPs rest where the volume hides. Echoes drift through shifting tides. Through the storm, the calm I feel. Rocket scooter steers the wheel. You're up before the sunrise. Blue glow on your face again. Coffee ring on the desk. Same sweatshirt, same pen. Charts dancing in your glasses. Numbers racing around your eyes. I'm spinning circles on the carpet while another ticker flies. I bark at the candles, I growl at the red. I howl when it's climbing, you just scratch my head. You say sit, pickle, sit, while you chase another train. I see the pattern clear as daylight, but you never rolls back like the tide. You miss a move, you blame the spread. I just nudge your knee instead. If you heard my little warning song, we both have bigger beds. I bark at the candles, I growl at the red. I howl when it's climbing, you just scratch my head. You say sit, pickle, sit, why you chase another tread? I see the pattern clear as daylight, but you never hear the calls I made.
Trading with the prop, forgot to put my stop. Gotta take a loss, oh not again. What will it take to avoid a mistake? Gotta take a loss, oh not again. But I found a man in trading land, launched a brand new site, and it made it alright. That coward's the hero with his DD bands. Guided my hands through my trades and prop lands. Now I found my groove. Made a brand new move. See the green light shining in my eyes. Payout will be nice, a few hundred suffice. Gonna get a payout in prop land tonight. Ooh, prop land's alright. Tracks on the screen, ticking in time. Risk feels heavy, but the rhythm's mine. Lessons learned in the red and blue. Every loss just points me through. Yeah, I found a man in trading land, launched a brand new site, and it did it alright. That coward's the hero with his DD bands, turning my losses into new plans. Now I found my groove. Made a brand new move. See the green light shining in my eyes. Payout will be nice, a few hundred suffice. Gonna get a payout in prop land tonight. Not again, not again, I won't fall that way. Stops in place, I can fight another day. From the drawdown lows to the winning highs. Propland dreams light up the skies. I found my groove, made a brand new move. See the green rose sparking in my eyes. Payout will be sweet, steady wins on repeat. Yeah, I get my payout in Propland tonight. Oh, Propland tonight. Propland tonight. Propland tonight.
All was quiet in rocket scooter land. Matt killing trades like Dahmer, eating Arby's meat and making Arby's trades. Liquidity pockets are literally printing money. Half cap working like your mom on the corner. Red lines more like gold lines. People making money. The chat was going crazy. One day Matt was telling a story about big soap. Fuck big soap. Went out of the corner of his eye, he noticed a troll.
Sorry, I was talking to myself. Sorry. My Ninja Trader crashed for some reason. Sorry, I was talking to myself. All right, guys. Spinning that wheel here. 5, 4, 3, 2, 1. Sorry, I had my thing muted. Oh, that green juice gives me power, baby. Power me up.
But he appeared again. Check out my trading strategy.
Ooh, DTLT trades, baby. I took a 12 contract ES short, bear zone top again, right back down to MHP. Same trade I've been making all morning. Bouncing between these two. Looks like we're falling back down to MHP again. I'll be the smart trade here. I'm gonna lock it in probably. I'll take the $9,000. $55,884 today trading. Just trading scalps. I'm good with this. Probably gonna sell off from here, but I don't care. MHP's a magnet, bro. Like, it's been so crazy. Congratulations, DLT. All right. We'll take a break in a minute. We'll do one more giveaway in about 5 minutes, so don't go anywhere. Hold on, I got some business I gotta do. Hold on. Hold on.
He ended the reign of very fat Matt, real Matt. Got back from India and high five slightly fat Matt. You are the man, slightly fat Matt. Please join my team. Slightly fat Matt is the man. You better click the link when you can. Slightly fat Matt is the man. You better click the link when you can. Slightly fat Matt is the man. You better click the link when you can.
Chart of colors, whispers lies. Neon arches twist the skies. Numbers dance like drunken flies. Where's the truth that they disguise? Patterns break, they never hold. Chasing shadows, growing cold. Retarded rainbow magic, trying to find the magic key. Lines that loop and spiral free, but the market laughs at me. Triangles that tilt and sway. Fractals lost in disarray. Every graph's a masquerade. Fortunes teased and then betrayed. Fibonacci fever dream. Nothing's ever as it seems. Chasing chaos, chasing schemes. It's a rainbow tearing at the seams. Retarded rainbow magic, trying to find the magic key. Lines that loop and spiral free, but the market laughs at me.
All right. We're gonna do one more giveaway in a couple minutes here. Like I said, I've been scalping this range left and right. Not a bad play today. Although I did make 60K last night, I just lost 20K trying to long at the wrong spot. Worked my way back another. Actually, I was down probably to 25K this morning, so I probably made 30K since I've been on the stream and just making it back. Like I said, just taking the million challenge account. At any point, there's going to be a balance. It's just going to hit at some point. Maybe today, maybe this afternoon. I am withdrawing like half of it. I tried to leave myself 250K. I'm trying to check out like roughly leave like 250K left in there. Although it was hard to gauge how much because I put in the requests and then at night I put another one because I was in the middle of a trade, so it'll probably be a little bit less than half because it won't account for my gains from yesterday or my gains from today. But at some magical point in time, you're gonna look at this and it's probably gonna say 250. I'm sorry, 250 to 300. It's gonna be in there somewhere. The balance is gonna cut in half. I am taking it to 1 million. I don't understand your question. Whether the 300 grand is here or there or whatever it is moved. It's still there. It's not like it's disappearing. In this environment, the market is just too unsafe for me to do this challenge. That's what I'm trying to tell you guys. It needs to be protected so that in case I blow up, I can put it back in. That's not fair. Well, it's mostly like partitioning, right? Because I'm scared that I'm going to blow it up in a single trade or two. Because remember, I took a $220,000 hit when Trump mentioned what he mentioned, and I'd stepped away for 10 minutes and the market flies up hundreds of points. So if I partition the money elsewhere, then I can always put it back in if I blow up, right? So the idea is just that I'm not taking profits out, I'm just partitioning them out of the account. That way I don't fall asleep and accidentally lose the whole thing. They're still on the side in reserve the minute I need them. So I'm just removing them from the account, just account partitioning, right? Give it to you guys to trade for me. All right, Mora, I got you. Red News just released. What do we got? More war-based news. All right, do me a favor, friends. I love that you guys all stay here with us every single morning. Hit that like button if you don't mind. Do me that favor there. Hit that like button. I think we have a Lucid account to give away. If we get up to 550 likes, I'll throw out a Lucid account for you guys. We're at 484. Yeah, for like 10 years, I've taught account partitioning, and the idiots on Twitter just don't even know that that's how I trade. Double my account, take out half. Double my account, take out half. The goal of this challenge was to 10x the account to do something showboaty, just for views, right? To show off, and then take out half. But instead, I'm making it halfway and taking out half. It's just too dangerous at this point. The market is not playing ball, and I'm lucky enough to get here as I've gotten here at this point. What I'm gonna do, like the goal is that the way that it works is 100K is the start, and if I dip below 100, I can pad it to go back to 100. If I make profits to $1 million, I take out half, get to 500, keep going. That was the goal, right? The problem is that this market is swinging up and down so hard. It's $100,000 days up or down. Now, the fact that I'm trading very well has allowed me to make profit, but this is just an impossible market to try to thrive in. I need to take that money off to the side. So what I'm going to do is take half of it. Let's just assume half from here. You know, it's going to be, it's going to be more like 300,000, but assume half. Let's say 500, assume half. So 250 is going to go off to the side and just chill there. Then I'm starting with 250 here to continue to grow that from there. Worst case scenario, this falls down below 100K, then this goes back in. Easy as that. So account partitioning is a trick such that not all of your risk is put into one account at any given time. Your money is safely on the sideline so that if you accidentally fall asleep and Trump tweets something, you don't blow up the entirety of your fortune. Your net worth not gone in a single trade. Am I taking the QQ open DD ban? Wait. I'm not gonna trade for here anymore. This is literally sitting in the middle. I don't try to trade consolidation or volatility from the middle. I usually wait for a stretch and make a decision. I feel like it's still probably gonna come down, but who knows, man? It just seems random and choppy. The fact that I did what I did is probably enough. It's over trading from here, I think. Talked about how market broke below the pink line. We've broke for months. Could you talk more about it? If your statement is bearish for the next few days, Rod trades 100%, right? We had a catalyst that was active. Nadia Fisher says, I'm just being smart about it. Yeah, if this was a solid bull market, I wouldn't be taking risk mitigating steps. But this is how you should trade. I mean, the market's telling you, God, I mean, look at this. I can't even believe I didn't blow up like 10 times over. The fact that I made money, I don't know, man. I mean, honestly, guys, I've been trading this is year 16 of me trading. This is the hardest it's ever been, and I'm at the peak of my career. So I'm as good as I've ever been, and this is the hardest it's ever been. So let me tell you, if you're not the peak of your career, maybe I haven't peaked, maybe I'll still get better. But imagine how hard it is for me. Imagine how hard it is for you. Don't sweat it. If this has been tough from like this moment in time until here, if you've not been thriving in this market, that's okay. I'm telling you, it's the hardest I ever remember it being. The million challenge, oh, I would have made $1 million 3 or 4 times over this way. and not in this. So the idea is that like I'm beating Wall Street. Wall Street funds are not making any money. The S&P is not going anywhere. I'm 5xing, which is good, right? The fact that I'm beating the market when it's choppy, I don't care what anyone on Twitter has to say. There's nobody else out there thriving in the market like this. And it's hard for me to do what I'm doing. I'm doing poorly relative to what the market's doing poorly. So I'm doing great, all things considered. The market's poor. So I need to be smart. If I get the account to 750, do I didn't pull the 250 partition back in to call a challenge success? No, it's just $1 million to make $1 million bucks from 100,000 to make it to $1 million. So I need to make $900,000. The P&L will still be the P&L. It's when you withdraw money, the P&L doesn't change, guys. It's the same. I just blew 2 funds. Oh, that's funny. All right, let's type in Lucid, guys. Y'all get the likes up. 550. Let's go. Okay, let me hold on. I haven't done it yet. Type in Lucid now. Hit that like button. All right. I'm starting over. Type in Lucid again. Starting over from now. Go now. Go. You've learned trading since December last year. Honestly, it's in a nightmare mode. And man, I'm telling you, dude. If you guys have been spinning your wheels and just having a horrible time since late last year, understand that that's the market. That's why everyone's kind of quiet on socials. Nobody out there is banking, man. Everyone's being smart right now and sort of like winding down. This is a smart way to be. This is not the bull market of the last couple of years. You know what I mean? You're not gonna, a lot of times in a bull market, you can see 3 or 4 green days in a row. I've seen 13 green days in a row. I think that's the record of what I've seen. Like, you sometimes get, and again, people might trade better in this environment if your environment is always reversing and scalping ranges. Reversing and scalping ranges works very well in this environment, but the minute it shifts to a bull market, you're gonna lose 3 or 4 days in a row once you finally realize it's bullish or bearish. So it's like, every strategy works at every point in time. You have to switch, and I've switched to a scalping strategy. The problem is that the probabilities of all these things happening have just shot. Structure is breaking so much more than it ever has before. I'm certainly not getting 90% MHP bounces in a bull market. I feel like it's probably 60% since December. You know what I mean? And in this environment, it's just when you have this transitional market, it's going to be doing that a lot. Whoa, these guys are making like Pokemon cards for each other. Wait, where's mine? MFTV. Wait, did they make one for me too? Steven Kalajian has one. Night Trader has one. Where's mine? Oh, let me send Luis a message. Maybe they'll post it whenever I go on TV. They're making like these like maybe I forgot. Maybe I wasn't paying attention when they made them. Type in Lucid, guys. It actually feels nice to not be juggling like 2 prop firms at the same time. I'm gonna tell you, I've probably taken about close to $1 million something bucks in prop firms in the year. A little bit under a year I've been doing it. I started seriously trading prop firms I started Tradeify last March, a year ago. Do I not just trade copy? No, I never do copy trading. No, I never copy trade. I'm feeling the short trade, man. I still feel like it's coming lower. MHP break a second time. This could probably be lower lows for the day, and I think I'm feeling it. Yeah, dude. I don't do copy trading because a trick of the prop firms is to not copy trade. When they let you copy trade, they're just accelerating their income by letting you copy trade. That's why they let you do it. The trick is to spread your risk out. If you want a return on your investment, you need to spread your accounts out. It's a better chance of winning if you sacrifice a couple to make money with the others. This isn't because of the news rule of copying from stream. Oh, no, actually, that's kind of funny. Coincidentally, it would seem like that, right? No, it has nothing to do with it. Nope. It just comes down to... Hold on. Yeah, the guy on YouTube that... Oh, yeah, you saw somebody copy trading that said it was hard. Yeah, they're really just managing one account. Yeah. Yeah, no, it has nothing to do with the announcement of... Trust me when it comes down to it. Look, let me explain something about the industry, right? About the prop industry. I'm safe. Like, that's as simple as that. Unless I'm blatantly talking shit about a firm while I have a code with them, like with Apex, is all I did was blatantly talk shit about them, even while an affiliate. They're not going to cancel us. We're like one of the largest prop affiliates on the planet. All of our partners are extremely pleased with us, so nobody's gonna fault me for streaming and other you guys copying my trades. No way. They're very meticulous about it. They're not just that whole thing that came out. It's not because somebody was streaming and someone copied them. They have other ways of finding out that if you're milliseconds apart, you're copying. If you're on YouTube copying, you're 7 seconds apart. They know the difference. They know the difference between there. Trust me, I've talked to the CEOs about this already. The first thing I did when I heard about it was to clarify, and they're like, everybody I talked to was like, no, Matt, you're good. Don't even worry. So when it comes down to it, I'm 100% okay to stream and trade. So has nothing to do with that. The person that got caught or the person that got on blast really wasn't streaming and trading. They were orchestrating a copy trading sort of net. Look, I'm going to tell you something. The CEOs are going to send somebody into this person's Discord to find out what's really good. They're going to buy the membership and investigate. They're not just going to put somebody on blast while doing their homework. Somebody's Discord is doing a copy trading sort of service, like I'll put the play here, you follow me on the play kind of thing. Then they're going to catch you, right? They're going to go in there and just monitor what you do before they take action, because they want to distinguish, are you actually trading or are you got some kind of thing. There's a lot of services out there that people can like pay. Have y'all seen these on Instagram? It's like, pay me and I'll pass a prop account for you and you don't have to pay me until I pass. Have you seen this crap? There's all kind of like side businesses popping up around this prop industry like that. Anyways, they're not busting streamers. AJ's thing was not about that at all. According to everyone I talked to, they were like, Matt, you're good. Don't even worry about it. This is not what social media says it is. All right, I'm spinning the wheel. If you're on YouTube, you're good. What I use for news, I use Financial Juice. They charge $5,000 for a $7,000 account. Jesus Christ, dude. You got those ads all the time on YouTube. It's crazy, right? Winners, you know the drill. Lingo, congratulations. You go to my Discord, which is the link in the description below the video. We'll give you that. Go to the contest channel there. Message an admin named Slacks. Send him a screenshot of your YouTube ID and it'll hook you up with your account. Lingo, type something in chat to claim your prize, a free Lucid. I'm sorry. Did I say, oh shit, I typed in My Funded Futures. Let me double check what this is. This is Lucid. Oh crap. I swear it said Lucid today, Andrew. I did too yesterday. Oh fuck. All right, you're getting a My Funded Futures account, my bad. This is from My Funded Futures, not Lucid. I swear I did 2 Lucids yesterday, that's why, my bad, my bad. Andrew, we'll just give away My Funded Futures. I usually set this up pre-market, so if you need to send me notes, send the notes pre-market because I set the poll up then. Sorry about that, my bad. There you go, congrats. All right, we'll do one more giveaway in a little bit. That was My Funded Futures. Sorry, I hope you're cool with that. Put on the chill music. You don't like the AC/DC? You'll like My Funded Futures. It's one of the best firms out there. Oh yeah, dude. It's my favorite firm, I would say. My Funded Futures has been my favorite experience. I would say. Funded Next, I've probably made the most with. Tradeify, I've made a pretty decent amount with. ETF, I made a lot with as well. What platform do I use for the AMP account? TradingView. What's the appeal of an ETF fast track? It's ETF fast track is the same thing as okay, so One Step, right, is the same thing as the Apex account. It's a trailing drawdown dirt cheap account, and fast track just if you get there at a certain amount of time, it's that kind of account, but it has a stopwatch. So you have a certain amount of time you have to pass, and they make it a little bit cheaper, but you have a limited time. So it's like, howdy. Hey, Pickle. Are you going to get the sod? Okay. If they're probably sold out when you get there, but there is. Did they deliver? Hope it's on like spring or something.
It's probably is. Company with all the mound of dirt.
Yeah. Come here. Is your eye swollen? Hold on. Oh no, you're okay. No, you just had the red light was shining on your face. But it was only shining on one of your eyes, so I'd like go stand over there real quick. I want to show you. Like stand this way here. Okay. So everybody, I don't know if you can tell, but it's, let me take a picture, I'll show you. It looks like your right eye has pink eye. No, look at me like you were looking at me. Hold on. Okay. Now come look. This is what I saw. It looked like you have pink eye on one of your eyes. You see that? See that? So when I saw it, I was like, "Is your eyes? Were you crying?"
Yeah, talking to that person.
Did somebody hurt your feelings?
No, yeah.
Who do I need to hurt?
Walked in his head.
What's up?
Oh. Washing up.
You're gonna what? Can we just pay him to grade that area and drop the sod in? I'll do it myself, but if he's coming, let me ask him if he can do it, then he can go pick it up and do everything. You don't have to go get it yourself. Well, it's not a few, it's a couple hours, it's 2-3 hours worth of work. You know what? Ask him, can we get a quote?
Waited like everything else that he did. You know me. Ooh, it's starting.
I know, we're kind of trying to get over working with, this is the guy that did the fence, you guys.
The guy that put the leveler on the floor.
Mm-hmm. Yeah. Yeah, ask him, just be like, we need to grade a patch of the grass where it's collecting water. We need to redo that and just lay down probably 20 square feet or 30 square feet of sod. If he's coming out to look at everything, he can come out and determine how much we need and everything. If it's under $1,000, I'll hire him to do it. I'm trying to prevent like having to do work. I'm being so lazy. I don't think it'll cost $1,000. I'm just saying if he comes in over 1,000, way too much. I bet you to just resod and drop it, it'd probably be 500 or less. The grass sod is like a couple of bucks a square feet. It's not a lot. It's just a labor. But we're gonna need sand and topsoil to drop on to like level it out. That's what you put on. Create the grading layer. Yeah, and plus materials and everything, and I don't.
You're not getting.
I don't think.
Even if it's a penny, you're not giving it to you.
Yeah, this is the guy that did our fence. He'll probably have to do it 10 times to get it right.
Oh my gosh, y'all remember how I literally dragged up cedar wood into this room?
He means do I? Yeah, I have an 8-year-old. Yeah, I have an 8-year-old son.
Okay,
I didn't buy her flowers today. That's why she's crying. Aww. I'll
yeah,
get you
my
flowers.
flowers are dead, honey.
Oops, we'll get you some more. Thanks for all your help today, by the way.
I still go.
Ask him really quick, and then he can go get it. That's another thing. That's gonna save us a trip. Yeah. I'd rather pay for them to do it because I was really just gonna YouTube it, and
If you're gonna YouTube it, let me go.
I was gonna YouTube it. I mean, I kind of know how to do it, but I was gonna YouTube this thing. I'd rather someone else do it. We're using him again. Well, he's the contractor, and what we found out is he just goes to sub out the work to random crews that he knows, and it's not even like him that's doing it. Something small like this, he'll just sub out to some landscaping crew he works with, and that's fine. Yeah, I have an 8-year-old. You just asked a little ago. Yes, you keep asking. Have I seen oil today? No, let me just look at oil really quick. I've been so focusing on the index. Oil is starting to move on that news of more Iranian bombings and stuff. Wait, that was a couple of minutes ago. What on earth just happened? Hold on, let's pull up financial G's. Something's going on with oil right now. Oh, U.S. will not implement a crude export ban, Politico. Okay. Why would we... Oh, so, okay. So let me explain to you what this means. So crude export, right? Back in the 70s, I think it was when they actually created the crude export ban, where we could only export our crude to Canada and Mexico. That was in place until Obama lifted it in like, I don't know, 2015 or something. What happened was we were preserving our own oil energy to wean off of like oil in the Middle East and stuff. That way we made sure we had enough for us before we actually sold it to other people. You guys remember like, you know, countries starving themselves to pay off their debts or starving themselves to like make money. Remember Romania? Remember that whole thing? Romania tried to pay off its country's debt, and then the country was in poverty, so they, you know, did a coup and overthrew the president and all that stuff. Anyways, same thing. We don't want to send our companies can sell our oil abroad, and then we don't have any for ourselves because there's a political unrest in the Middle East. So what we're doing is the threat of an export ban. The reason you have an export ban is to conserve energy infrastructure here. So the fact is, the conversation, I'm just saying what I know, the conversation of we're not going to have an export ban means our energy infrastructure is fine. Our supply won't be interrupted. We're still going to have, you know, we maybe not be getting oil from the Strait of Hormuz, but we'll still be getting it from elsewhere. Because what that does is that implies that the strait will likely be closed, and then we're going to interrupt shipments from the Middle East. Oil prices should go up. That's all that means. That conversation is just validating that idea that, you know, we're going to have some issues getting oil out of there. I think that's what responded to that. $4 in a couple minutes. Hell yeah, right? What do you guys think, man? Are we gonna rally from here? Are we gonna sell off from here? What do you think? Does this just die again today? I don't like seeing a lower spinning top kind of candle that wicks around the lows of the month. That's a continuation candle in my book for tomorrow. The market is extremely volatile at a low. That's what spinning top means. Like, forget the candle pattern. I mean, teaches it's volatile at a low. That's not good. It means it's one tipping point away from a nasty red candle again tomorrow. Sorry, that's the 4-hour chart. Don't like to see that. You don't want to see volatility at lows. And tomorrow's monthly expiration. Tomorrow could be the candle that just drops to lower lows. And I'm not betting on a move back up today. All right, guys, 600. We did 600. One more. 50K Lightning account with Tradeify. Ooh, we love Tradeify. So our sponsors today are Tradeify, My Funded Futures and ETF. Appreciate you guys for donating accounts as always to the stream. Supporting the community. We love y'all. Sorry, that wasn't for Lucid, but we do have Lucid accounts to give away tomorrow. I gave away 2 yesterday. That was my bad. One more. Tradeify, type it in. Please, MFFU or TPT. Hey, man, you want an MFFU? Neon is giving away My Funded Futures today. That's today. TPT, I'm giving away TPT accounts tomorrow, and Neon's giving away TPT accounts tomorrow, so don't miss out. Oh, shit. There it goes. Check it out. Now it just hit. Oh, they left me at 260. Man, my math was way off. I was trying to aim for 200, but whatever. So the balance just changed. Just updating you guys there. Full transparency. The transfer, this other transfer went through. But it's because I made it's because I made 50 something K. I was aiming to start over at 200. So I took out everything from the account to try to leave 200, but I was telling you guys earlier, I was estimating between 250 and 300 because I had made some money. So had I not made profit today, this would have been close to about 200. So. Y'all make sure when the trolls and idiots come here and they're like, what happened to Matt loses money? Y'all just explain it. That way I don't have to explain it. So I'm going to cut my risk down a little bit as far as like size of trades going forward. Now it looks like I made 25% in a day, right? That's crazy. Anyways, y'all make sure to do me a favor. If anybody asks in chat, can y'all answer the question for me? That I don't have to say anything. If some are genuinely asking, can y'all answer it for me? I don't want to answer it 10 times. Y'all You're gonna tell them I went all in on wheat. It wasn't so good, and it completely crashed out, throwing your chair through the wall and everything. Yeah, y'all can make up some hilarious horror stories and be like, "Oh, you should have watched Matt stream. He totally went full. He just went like full crash out. He was crying, so he lost $500,000 in a single trade." Y'all just make up some crazy stuff. That'd be funny. But at least somebody say the real thing. But you know, there's gonna be somebody clipping this and being like, what happened? But I posted in Discord last night. I was like, taking out some withdrawals. The reason I took out 2 was because I ended up making a lot of money. I did it yesterday, and then I made a lot of money, and then I did it again last night, and then I made a lot of money. So I was like projecting. I made a lot of money, and then I put another request last night again. I was like, man, I'm making too much. I just want to lock it in and start over at 200K. So as you see, had I not made the $55,000, I would have been right at 206, which is what I was aiming for, 200. But is Tradeify not pushing crypto on me? Believe it or not, Tradeify is very like non-pushy when it comes to like the prop space, which I love. And most of the good ones aren't. Like Tradeify and My Funded, they don't ever like sit there and like pull me aside and say, hey, we need you to say this, or hey, do this, or hey, promote that. They're really hands off, which is kind of interesting. But the big ones are like that. You know, the smaller ones, or the, you know, the ones that try to like wine and dine you, are very pushy because they're trying to build a good reputation out of a bad one. The good reputation ones, they just basically say, hey, here's what's going on, you know? We'd love for you guys to talk about it if you want. But it's never like checking in, hey, are you talking about it? Or hey, are you saying this? They're really good partners. Tradeify is a very good partner, and My Fund is a very good partner. Luce is a very good partner. They're very organized, and they're very hands-off. Yeah, they're not really, the good ones aren't really that pushy because they have great reputations. They don't need to sell you on an idea like the other ones are trying to. They actually can stand on business, you know, good plans, good reputations. Man, Top Step, man, boy, what happened to them, right? They fell really hard. They really have like, they were always good accounts. Get ready, I'm gonna spin the wheel a little bit. So Monday, the prop scoring website should be launching for beta tests. If you are a Rocket Scooter member or Bootcamp user, you'll be able to use the prop scoring website. In its beta, it's gonna have most of the features.
Took a long off a liquidity pocket in US. Why would you ever short when resilience is positive? I don't even know. I think it's because I'm trying to be fast. Am I about to get scammed? About to get scammed. Rocket Scooter, I know that you hate it. I don't know why, but I can't help a little short.
Solo King, Solo King, where are you at? All right.
So what's the trend? Was I looking at monthly maps? $2.20 accounts. It was enough for me to burn out again. Can you excuse his behavior again? Because I don't like losing so much. Let's head long out the door. Wait for MHP. Let's go long all the way. We could rise to profit with the top insight and managing my risk. Wishing this trade were true. I love winning with you. So what can I say? Rocket Scooter, I know that you hate it. I don't know why.
Oh.
Rocket Scooter, I can learn my lesson. Just give me a chance. I love winning with you. Winning with you. Rocket Scooter. So what can I say? Rocket Scooter, I know that you hate.
Congratulations, Yash. Hold on. Congratulations, winners. You guys on the drill. That's the last of the giveaways today for this stream. But on My Fun at TV, I'll be doing some more. Watch this just rally straight up today. Who knows, man? Arb is negative. Oh, Arb is negative 45? Bruh. Oh, yeah, I can't trade big anymore. I just got the balance down. No. All right, I'm done trading, guys. No, you know what? Arb is minus 40, Arb is minus 10. That's the lowest it's ever been for the overshoot on NASDAQ there. I wonder, Trump is talking right now, right? We're not putting troops anywhere. Oh, okay. So this is going to be very news driven. It's going to break structure. So just kind of hands off, to be honest. We're not putting troops anywhere. Iran excursion will be over soon. Believe the impact of Iran would be worse. Will end soon. Iranian leadership is gone. I don't think this is going to have the impact we thought it was going to have. Then we put a small trade in here. I don't think this is going to create... He's already saying it's over. He's saying the same rhetoric he said like earlier in the week of we're ahead of schedule that put it up 20,000%. I don't think it's going to happen today. Negative 50. It's just news driven. The bet would be that we close below hedge pressure because we open below hedge pressure. So again, same trade as earlier, exactly the same but smaller. I'm now gonna maybe formulate a bet and stop there that we close here. I'm now. Oh, did I grab S&P? Yeah, S&P. We're discussing Japan buying U.S. military equipment. That was going to be worse. Much about the increase in oil prices. Oil should probably be turning around too. Now I'm just betting on the fundamentals of expiration. I'm not betting on war anymore. This is not the war thing. This is the fundamentals of what the Fed revealed yesterday, which is that the economy is going to be higher inflation for longer. Same trade I made this morning, but now for a bigger P&L. I'm going to ride it till the end of the day. I'll be back.
They'd ride that rocket till the end of time. Yeehaw, ride 'em high, ride 'em proud, till the bear comes roaring from the thundercloud. Clippity clop, watch your portfolio drop. It's rodeo time for the market to flop. Elon's tweeting memes, Dozy howling loud. Kathy's lassoed star spinning round the crowd. But the Fed's a bronc that don't take kindly to reins. One rate hike buck and his goodbye gains. Yeehaw, giddy up, then eat the dust from all-time high to all heck.
What happened? Did it crash? Oh, shoot. What the heck? Why does it keep crashing? Is Trump going to create a big rally today? Again, I'm a little early on this maybe. I think oh shit, I forgot I need to trade smaller. Basically my bet is that we stay on bear side going for tomorrow. Now again, this is sort of like a little higher than I thought for a momentum based trade. This is more just chop. I took out everything but 200,000 withdrawal. Somebody asked about the account. Just to partition the money like I normally do when I trade, is to partition money to the sidelines. That way I can use it later if I need it. So by the end of yesterday, I was close to 600,000. I tried to take everything out to stay at 2,000, and then I ended up making another 60 today. So that's why it's up to 260 from 200. Essentially, I'm just continuing the challenges from 200, and this is 200 to 260 today. Yeah. Put an announcement. It's not even, it's gonna matter. I'll be explaining it for days, probably so. Hell no, what if I get to 500,000 in a couple of days? What if I just get right back to it? Arb is falling. Yeah, that's why I'm taking a hit on this with Arb falling. I see which stocks have broken through half gap. Apple is right on the edge there. That's a big part of it. So Apple's the big. It's a big part of it. Well, it's actually outside the Mag 7. Let's look at the Mag 8. Hold on, I think I'm missing something from my Microsoft, Amazon, Apple, Nvidia, Apple, Meta, Microsoft, AVGO, Google, Amazon. 1, 2, 3, 4, 5. Am I missing something? No, it's good enough. Google. Tesla, thank you. I knew I was missing something that I always put up here. That's right, I am missing Tesla. Thank you. Trump is saying Powell's a dumb and incompetent person. Dude, I'm telling you, man, the feud between them is comical. It's more petty than the feud between like some of these simfluencers and the people they scream at. Powell's doing a bang up job. I'm not gonna lie. He's done a fantastic job as chair. He's done everything right that you need to do in that position in the environment he's thrown into. There's nothing I could ever complain that Powell did incorrect. Mathematically speaking, he brilliantly executed. Quantitative tightening started at the right place. Rate changes came at the appropriate pace that we didn't cause hyperinflation. We didn't cause massive layoffs, market crashes. He wiggled us out of a recession in 2022. He wiggled us out of COVID in 2020. I can't complain about Powell at all. Like, as far as Fed chair goes, he's been fantastic. Now, let's not think of from the perspective of, man, I wish he'd cut rates and save my job and save my stock market. Let's think of like the job of the Fed is to control the money supply, control inflation, right? Or working with the Treasury for the money supply, right? So like their goal is to create that effect. Monetary policy, that's their only goal. And they're trying to prevent long-term problems the economy could face with the few handles they have to change. Arbitrage indicator strikes again. So apart from me like wishing he just cut rates to zero and then we live in that lovely world again, putting my bias aside, you gotta say that he navigated some really weird waters pretty good as much as they could. Like all the Fed did in general. Trump hates him because he won't cut rates to make the market go up. Cut rates, market go up. That's Trump's whole thing. He's waiting too long to cut rates. Like Trump, shut up, dude. Like I like you a whole lot, but let the bankers do their job. Like their job is to understand this shit. All day they know these numbers. Like that's their job. Like they're doing a pretty decent job. Had he just cut rates to zero, we'd be sitting at 5-6% CPI if they did that too early. We'd have been going through the roof. You can't have a global shutdown where you shut down every single business for a couple months and then turn it back on and not have 20 years of hyperinflation. That is such a huge problem. We wiggled right out of that with barely a scratch. 5%. God, it was fantastic. Like it could, like I'm gonna tell you guys, this should have been so much worse. When COVID happened, the first thing I said on my stream was when they were shutting everything down, I was like, you know, the president's shutting down all the businesses. And I was like, you guys, this is hyperinflation for decades. You have to understand how the impact this will have on the global economy. You can't just turn every business off and then turn it back on. And people come back at different rates because they're scared of a virus. This company turns back on, but this other company doesn't want to. It's not like everyone, you're off work, okay, everybody, you're back on the work. It doesn't work like that. People trickled in and had to make new arrangements and new deals. And then because of that, I mean, housing prices doubled. You guys remember that? Your house costs twice as much. Like, that's how bad it could have been. Imagine a prolonged version of that. Your salaries had to go double in a period where people didn't even have jobs to pay for it. You know what I'm saying? Like, at that point, it could have been so much worse. And I have to give credit where it's due, because we kind of walked out of that with just a mild inconvenience for a couple years, and things kind of normalized, right? And in any other ordinary world, if it wasn't managed correctly, right now, we would be complaining that the last 5 years, you wouldn't be able to buy a house because you can't afford one. God, that little 3,000, that 2,500 square foot house is $2.5 million. Like, it's like double the price. I can't even get it. You know what I'm saying? So it kind of irks me when I stand by the president and many of his policies. I am kind of a Trump fan-ish. He's just so dumb when it comes to stuff like that. You got to let the bankers do their job, man. Don't pick on Powell because he's not doing what you want him to do. Trump sounds like a certain streamer we all know to pick on people if you don't do what they want him to do. You know what I'm saying? Just bullying people. Don't be like that. Let them do their job. Why does he hate Powell so much? Because of the first term, when he was president the first time. If you guys weren't trading that long, let me tell you what it's like. Back from 2016 to 2020, we were in the same exact boat where there was a trade war with China. He was threatening tariffs on top of people. And then the economy was sort of, the stock market was being shaky because of that. And it wasn't rallying fast enough so he can crown himself king of stock market. Because in his first term, his exit conversation was, the stock market has hit all-time highs because of me and the biggest year growth because of me. So he wanted that crown, and because Powell wasn't cutting rates fast enough to accelerate the stock market fast enough, he was picking on Powell early on. I remember, because we were like, why should Powell cut rates? It's where we need to be. And Trump was like, he's not cutting rates fast enough. He's kind of an idiot. And Trump was like threatening him, you know, I can replace him if I want to. If he's not going to do his job, I can replace him. It started off like this in 2017, 2016. And Powell wasn't budging. Powell's initial stances when he go on this press conferences back then were like, I understand the president's position, but we're going to do our job regardless. He was so defiant. So he was basically just saying, I don't care what the president says, I'm going to do what I want. And Trump didn't like that. Powell was like, I'm going to do my job. The president doesn't do my job. I do my job, which is correct. The president doesn't do the Fed's job and shouldn't control the Fed. But Trump was overstepping his boundaries to try to bully Powell into cutting rates. For what reason? To rally the stock market. That was the reason. You know, we'll save American jobs. Americans are losing their jobs because Powell's not cutting rates fast enough. He said this 8 years ago. Can you imagine that? Imagine being a trader that knows their shit, and I'm like, yeah. Come on, man, I'm trying to be your fan here, bud. Like, Americans are losing jobs because he's not cutting rates fast enough. I'm like, bro, it doesn't work like that. Don't say it. Don't. So that was the one time in my life I felt like the president was kind of dumb. And I'm a big fan of the president and all of his other policies I like, but when it comes to that, so they were button heads. And why? Because Powell was standing on business and like, I'm going to do my job despite what the president says. We're going to look at the data and make appropriate monetary policy changes. And I'm like, in this case, I'm siding with Powell. But Trump picked on him and threw jabs at him in the press. He picked on him for years and threatened him and picked on him. Yeah, I could replace you if I want to. Stuff like that. And Powell stood on business. But this time around, Powell kind of wimped out a little bit. he changed his tone this term. Powell wasn't as defiant openly in the media. Like in the media, Powell was defiant, almost saying like, yeah, I know people always ask him, so what about Trump this? He usually basically would be like, ah, fuck Trump. He didn't say that, but his Powell way of saying it was like, you know, we don't listen to what the president's, you know, we respect the president's decisions or opinions, but we're going to do our job regardless. It's basically like Powell just saying, you know, and Trump didn't like that much. So then they butted heads. It's kind of like any bully. Like I said, we know a lot of them on social media, right? In this place, any bully you poke at, dude, they're just going to go on a campaign against you until they get their way. And that's all that it is. That's the only reason Trump doesn't like Powell. It's an old rivalry because Powell wasn't doing what he asked him to do. And if you were a trader back in 2016 to 2020, you had the same moments, the same thoughts. Like why, like Powell's doing a great job. Like the market's at all-time highs. There's no inflation. Unemployment's down. We're coasting, man. This is one of the best bull markets we've ever seen. Why is the president complaining? That's what we used to all say. And it's because the president was trying to bully China at the same time. And back in that time when the feud started, remember, I was there trading it. When the feud started, let me take you back in time. Enter one of the best rallies we've had since Trump was elected, and he was ready to walk out in 2020 with the market at all-time highs. Yet right at the end of his first term, he decided to pick a trade war with China, and the stock market was threatening selling off. So right around here, he started bullying Powell to secure his legacy as stock market all-time highs on the way out. The fact is, in 2019, the stock market had fallen 20% because of his own trade war rhetoric. So when he's trying to exit at all-time highs and the market's corrected 20% with 1 year left, you start to see your re-election bid not as strong when your re-election rhetoric is, I took the market to all-time highs with the best rally that we've seen during my term. So does everybody in chat understand where the rivalry started? Trump's tariff and trade war with China created this sort of craziness back then. And he wanted Powell to cut rates to stimulate the stock market so we can brag about it. 100% what caused it. Y'all remember that, right? That's exactly what it was. And of course, he exited his term at all-time highs. Thank you. You know, he's probably happy for that. And he got to say that when he got elected this time. I took the stock market to all-time highs. The best rally we've seen in the history of any president, blah, 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 blah. But imagine, because when he campaigned, remember what he said about Obama when he's campaigning against Hillary? Those people took our stock market into a recession. Don't vote for them. Because that's what you say to sway the swing vote, the poor people. You tell them that you're going to save the economy and save the stock market and save their jobs. He said Obama created and caused look at the last recession we were in. That's Obama's fault. And you're like, is it? Because the problems leading into it were during Bush's term. He blamed, when he was campaigning against Hillary, he was blaming Obama for the last recession that we had. You guys remember that? Oh, I got to go my phone and TV. Anyways, when you've been trading long enough, you just remember all this shit. So when he's campaigning, I mean, I think people forget, but I didn't forget. I was like, no, Obama didn't cause the last financial crisis. Brother, Bush was president then, but it was a bunch of investment bankers that caused that. But anyways, he was trying to blame Obama to talk shit about Hillary. It's campaign trickery. So trying to bully Powell into pressing the stock market higher with rate cuts was what caused the rivalry. Crazy, right? So to this day, they're still bickering. Bernanke caused it. He was a big part of it, yeah. Bush did a very poor job. I would say Bush did a very, very poor job at trying to step in and, or not stepping in and regulating this when he could. They knew that the mortgage bonds crisis was there as early as 2004. There were already people speculating on a crash. You can go back and read the headlines from 2003, 2004, 2005. You can see where it was like hype in 2003. And then 2004, some big talking heads started speculating. This is a massive problem. And you can go back and read that. Bush didn't step in and start regulating it immediately or doing anything about it. They could have stopped a lot of it. JD Vance keeps saying the current situation is to be blamed on Biden. Welcome politics. The absence of logic. It's crazy. I think Trump is doing a poor job at the Iran war. No, I think he's doing a fantastic job with Iran. It's quick, it's decisive. When it comes to military execution and as far as like diplomatic or anti-diplomatic strategies to get shit done, I always have to pat Trump on the back for doing a good, quick, decisive job. He doesn't play politics that much when it comes to that. He's not afraid to take action and do it, despite the risk. He's more of a risk taker than most presidents are. Which I have to say, I'm not a pro-war or anti-war person, so let's not have that conversation. In taking the stance of supporting the war for American and world safety, Trump's actions, if you are pro-war, were actually very good relative to anyone else making decisions in that particular environment. Not that I'm saying he should or shouldn't go to war. I'm saying if you take the stance that he should, compared to all other people that can make decisions executively, he's done a very decisive, quick job. It's, you know, the campaign didn't take 10 or 20 years to accomplish the goals, and well, hopefully it will, and we'll see, but Greenspan. Greenspan is the most to blame. Well, no, Greenspan was a freaking patsy for the Clintons, dude. I hated that guy. I'm gonna take profit here just to lock it in. Although I want to hold it for the rest of the day. I need to get out of here and go to my phone and TV. Greenspan was cutting rates with high inflation leading into Clinton's second term. In 1996, Greenspan was cutting rates rapidly leading up to the end of Clinton's first term, when inflation was growing. And we were leading into the dot-com bubble, which we knew was happening. For whatever reason, Greenspan went on multiple rate cuts, big ones, big chunky ones, like a point apiece, for whatever reason. And the market just rallied. Greenspan is a lot to blame for the bubble that popped in 2001. And then after Clinton got reelected, within months, he was raising rates to undo that. It made no sense why that monetary policy was that way back then. You can go back and look at the data. Look at CPI from 1992 to 1996, and then look at it from 96 to 2000. We were like rate cut, then raise rates. Oops, we're in a bubble. Let's start cropping out that, and then the market crashed. He cut rates to zero and allowed for the mortgage crisis to happen, then handed the crap to Bernanke, and then that happened, right? Yeah. Well, Janet Yellen was the after Bernanke was the one that also got handed that handed a lot of that bag too. She did a pretty decent job. Not as good of a job as Powell did, but I'd say since from Greenspan to Powell, you got to pat Powell on the back. He's been twice as good as the next best one. I can't say that I have a single complaint about like Powell's policies. Powell hasn't done anything where I've gone like, what? Like, what the fuck, man? All the time, Yellen would do stuff and I'd be like, why? Like, this makes no sense. Or Bernanke, laughable. Greenspan was like, you were always kind of, and I wasn't trading back then, but like Greenspan, I like when I go back and study it, I'm just looking at it like, was he just cutting rates so Clinton could get reelected? Like, let's go in a period of prosperity, get elected again. That's what I thought happened. Let's just push the market into a bubble by aggressively cutting rates, and then after Clinton got elected, he started raising rates like within moments to like, all right, let's boost the market. Okay, we blew it up too much. Let's pull it back a little bit. It made no sense. Let me show you what that rally looked like before I get out of here. I don't know if y'all like these like stock market history lessons, but it's kind of good to remember this stuff. Let me show you the period I'm talking about. Let's go all the way back. Oh, this is futures. Let me do S&P. Futures don't go back that far. This chart. Look at this, dude. This right here. This is what I'm talking about. Look at this rally. Clinton. Here's 95. Here's 95. And then here's 96. Clinton's second term. Got reelected right here. Jumped into office here. Clinton's second term. And then the dot-com bubble happened and then we blew up. We're like cutting rates into this rally. Cutting rates, cutting rates, cutting rates, cutting rates, cutting rates. Okay, let's start raising rates. Go back and look at it. It's hilarious. Like, holy shit, we're in a bubble. Okay, let's start cutting. Let's start raising rates again. Too late. .com crash. Recession for 4 years. Okay. Anyways, Ross Perot was the first president you were able to vote for. Also voted for Ron Paul, somebody said. I remember Ross Perot. Wasn't he in the running when Bush was running as an independent? Oh, what's the deal with airline food? Oh yeah, I gotta go. Shit, I gotta MyFunny TV, guys. I'll answer y'all's questions over there. What's the deal with airline food? You got a little Jerry Seinfeld sound going on here. Thanks for tuning in, guys. I made $59,000 today. Not bad. I withdrew everything up to 200K to start over and partition some of the profits off to the side. Just a safety measure for the oncoming volatility. We could be in a bear market for the next months to year. We don't know what it's going to be like, but until the data kind of like stabilizes, I don't have a really strong, solid, good bull market to trade. It's very smart to lock in the majority of it. And hell, I'll grow to 1 million just with the 200. So pretty good. Partition those funds to the side in case I blow up, I can start over. I've secured 100% secured profit for the challenge, which is great. All right, love you guys. Thanks for tuning in and sticking around. We shall see you in the flip side. Click that link in chat because we'll be live on MyFunny TV in just about a minute. Talk to you later.